All right, let's start. Apologies for the last 2 weeks. We have not had time to do training, but we are back this Saturday just to cover what we have missed. And hopefully now from Wednesday, we get back to our usual training Wednesday for NSE share trading and Fridays for international market. So today we are going to learn market cycles and how you can build a winning portfolio based on those cycles. The purpose of this training is to help you understand why market moves up sometime and why it moves down. And with that, you can take opportunities and buy when the market is low. For those who look for growth, you can sell when market is high. So let's start. So today we are going to read Kenyan market cycles, but you might find the same cycles we have here also affect international market. That's why I have combined Wednesday and Friday training to today. So we are going to start with two terminologies that you have heard. One of them is a bearish market, and you have also heard about bullish market. Maybe you could be wondering what they are. So for bearish market is when prices are dropping and they drop a lot, maybe with 20% or more. It's not just a small price movement. You find over time, let's say over a month, you have noticed the market have gone down by 20%. Or over a year or over a few months. That's what we call bear market, when prices sharply fall with a huge margin like over 20%. And you can always tell that not by looking at individual stocks, by looking at NSE share index. We have several NSE share index. There is NSE 10, NSE 20, NSE 25, and NAS. NAS is NSE All Share Index. The most active one currently is NSE 20. It contains a list of 20 big companies in NSE. So if you find the points for with a very huge margin over a period of time, let's say from January, maybe the points were 2000, and you have noticed it has over time it has gone down, and maybe currently it's at 1600 points. That is around a 20% drop. Then that year we have a bear market. Even on a month, if you find that has dropped. This you will not find in any app. It's there on NSE price list. I will open briefly and show you where it is. So Nairobi Securities Exchange, we will use index to measure the health of the market. That is the purpose of NSE indexes. It's not like international market where they are used to build ETFs. For NSE share index, it is used to measure the health of the market. And when you hear NSE say it's a bearish market or bullish market, they are referring to NSE 20 share index, either the drop or the rise. So if there is a drop with a 20%, then that period we are having a bear market. So a bear is like going down, the way bear sweeps down. They borrowed this terminology from that. I want to show you before we go to investor sectorology, where you can get that information. Let me just open that. This information is always freely available on price list. You don't need to struggle getting it. On our website, we usually publish that for free. That is NSE price list. So you go to AIB, accessafrica.com, then under research, there is a price list. You pick equities, not bonds, equities. Equities are shares. Then let me zoom in. You scroll down to where there is NSE share index. It is here. So you can track over time. Maybe you pick January. If you're able to do the average, then February, March, all the way to the current. So you are picking the second one, NSE 20. It is the most active. So if you notice it is going down by 20% over that duration, then you have a bear market. So I hope that is clear. This is where you get the NSE 20 share index. You just need to compare over a period that you are looking for just to determine whether you have a bear market or a bullish market. Let's go back to the presentation. So you use NSE share 20 share index to measure the health of the market to know whether it is bearish. And if they are over a period of time, you have noticed there is a huge drop, maybe from the average in January to June, and there have not been any rise in between, peaks in between, then you have a bear market. So what is the investor psychology during this phase, that is bear phase? Most of people panic when you see the market is dropping, or when you hear maybe this word bearish market, and maybe it is explained in a terminology that you may not understand, and they are saying the market is down, going down, because in a C share index, it measures the top 20 companies. So when they say the market is going down, most of us panic and you want to sell quickly. By the time you are all executing your sale trade, there are people who are willing to buy, but they withhold their shares. So you have supply exceeding demand. And in just the normal market situations, when supply exceeds demand, prices shoot down. So during bear phase, you find it's us investors who push the market prices down. You even push more than the current price. You find the other investors will now take that opportunity and buy cheap shares. So when you hear NSE saying it is a bear market, that's the time to get in. It means the prices have dropped with a huge margin. You only need to analyze the stocks that you need, check whether they are giving dividend, then you get at that time. So during bear phase is the right time to buy shares. So for those who have been asking, what is the right time to buy shares? It's during the bear phase because prices usually drop with a very huge margin. So a good example is during COVID time. We all panicked, and also foreign investors wanted to exit the market because of instability in global economy. So what happens? We all wanted to sell. We pushed the prices down. And this made some investors to buy shares at a cheap price. So whenever you hear we are in bear phase, just watch the prices where they are going. That is the time to buy. And you as the investor, you don't need to panic because market usually corrects. Remember there was a time Safaricom was at 2 bob. Most people panicked and sold. Right now, I think it has ever hit at 40. It has been giving dividend. So never panic whenever the market is going down. That is the opportunity now for you to buy more shares and do something called DCA, dollar cost averaging. So you have been buying at high prices. The market have gone down because of the bearish market. You buy at a lower price. Then the average price, that is the total average cost for buying those shares will usually go down. And when the market improves, now you'll be in a profit position. So in bearish market, one, it is the right time to buy even expensive stocks at a cheaper price because most of them, they go down. Secondly, it helps you average your costs down. Remember, if you go to portfolio valuation, it gives you a summary of your shares and the average price. That average price includes the cost. It gives you the tentative cost you paid to buy one share. So when you buy during bear market, you are pushing that average price down. And when the market value rises, then you are in a profit position. So that's how you can use a bearish market to rebalance your portfolio by pushing your average costs down and then buy more shares, maybe which you don't have in your portfolio at a cheaper price. And always be patient in the market, because that's how you first create compounding effects using dividends. And also, when prices improve, then you make money through capital gains. But remember, for capital gains, as I have said before, you have to sell for you to make money. So bearish indicators in Kenya, one of them is falling NSE indexes. And as I've said, the active one currently is NSE 20, but you can also compare the others. When the NSE share index is falling, it means the shares that are tracked by that index are losing in value. That is, their price is going down. Because NSE index, like NSE 20, it covers the top 20. So if it is going down, it means majority of the top 20, their prices are falling. Then you also need to check on trading volume if they are low. If you go to our online portal, on each share, you click on the three dots, which are usually on the far end. You're able to see more details. Just look at the trading volumes over a period of time. If they are low, it means there are very few people who are buying. And they are waiting for prices either to go down, they get in. So a bearish market, there are mostly two indicators. Falling NSE index if it goes below 20% or 20% and below, and also if you experience there is a low trading volume. So low trading volumes will mostly signal loss of investor confidence. Most people don't want to get into NSE. Maybe they are putting money elsewhere, money market fund. It could be international market. It could also be in government boards. Also, political instability. I think we are going into election, into campaign mode. Then after that, we get into election mode. During election, you find as investors, we panic. We want to sell and keep our investment in cash form. Remember, nothing happens to your share. As long as the company is listed as NSE, the number of shares you have doesn't change. What changes is the value of the shares, because price is moving every day. And as long as your share quantity doesn't change, you don't need to panic. Only panic where number of shares goes down. Because there are instances where number of shares goes up, like when you're given bonuses or when there is a split. Those you don't need to worry because those are free shares you are getting. There is no other scenario unless you as the investor you want to sell. That's the only time number of shares can go down. Price will keep on changing. One time it will go high, one time it will go low. You don't need to panic. During elections, just let politicians be, let them do whatever they want. We pass over the election phase, and after election phase, market will always recorrect. If you panic and sell during elections, then you are losing. So political instability again is also a signal for bearish market. So always check those. But there are also other signals like we'll see. There is also dividend cuts and also profit warnings. When companies are making announcements, there are those that give warnings, profit warnings in advance. In most cases, either they are reporting a loss or reduced profit or extraordinary profit. So that time you need to also check the market because each announcement have its own effect. If many companies are announcing profit warnings, then it will affect NSE share index because it means that day we all panic, go and start selling, prices move down. So for dividends, for those who may be new, when you buy shares, you become a shareholder of that company. Let's say you buy shares for Safaricom, you're becoming an actual shareholder. You're exchanging your money with an ownership of that company. You're giving Safaricom your money, they continue doing their own investment. But remember, there is an investor who came in during IPO, gave Safaricom money to go and do that investment. They need their money back. Remember, they can't go to Safaricom or EABL to request for their money. That's why those companies are listed at NSE, so that if you need your money and you're a shareholder, you sell to a willing new shareholder. So you sell to me, I will give you the cash. That is done through the broker. You exit as a shareholder, I become the new shareholder. When the company makes profit, they usually share part of it with their shareholder in form of cash. That is what is called cash dividend. Or the company can decide, let's reinvest this dividend profit, but give dividend in form of more free shares, which is called bonus shares. So dividend again is a way of a company sharing profit with their shareholder. So if you have seen a company which either have reduced their dividend, maybe initially they used to give 20, they have gone all the way to 1, it means there is an issue with that company. If most of the companies do that, then you find their prices move down. Because we as the investor, what we usually do, we lose confidence with those companies. You want to sell. The other people who want to buy. But when they see there is more supply, they will withhold their orders, pushing down the prices. You have seen on the market depth, you usually have different prices on the bid and ask. So the way they will withhold their orders, they will put lower prices than the top price. So it will force you as the sellers to sell at a lower price, pushing the prices down. So a good example, let's say ABR maybe was giving a dividend of 11, then they cut down to 5. Then you expect the price to fall. But you might see a different scenario now with one share rule, because all of us want to buy. We might see a bit of a difference with the way we have experienced the previous markets. So a company may also issue profit warnings, especially when their profits are dropped by a huge margin. And when they do that, we usually open that day. We don't restrict you to 10%. So you find the prices usually fall. And in most cases, you find it is solved by a bearish reaction. Market prices starting to move down, especially if it is many companies which are issuing profit warning at once. Then there is also impact of interest rates hike by central bank. We all know who sets based interest rates. It is central bank, just to protect us as the investors or also consumers of other products. So when CBK raises those rates, you find the loans become expensive. Remember, these companies, most of them, they take loans with banks to fund their business. So you find when loans are expensive, most of the companies, they will shy away from taking loans, meaning what? They will not be able to perform their daily business. Revenues go low, then you find they have lower profits. So you find at that point, most of the investors who are in NSE, when interest rates are raised, they try to move to government bonds. Remember, for government bonds, you have a fixed rate. That's why they are called fixed income. So you are assured of that income as you had agreed when you are buying that bond. So you find at the point where interest rates have gone up, most people move to bonds because they are less risky. First of all, government cannot default on a bond. Bond is just a loan you are giving to the government. So they can't default, so it is safe. Secondly, the rates are fixed. Here you have shares which are, you don't know where the price can move. So you find that when the interest rates are increased, most people will move now to bonds, which means what? We have less people who are buying. Remember, there are people who want their money, they want to sell. They'll be forced to move with the market demand, which means prices going down. Then we have global recession and spillover on NSE. So whenever you find big economies slowing down, it always have effect on Kenya, Kenya economy, which again NSE is riding on. Most of foreign investors you find they want to put out their money. So again, they are pumping sale orders. And if you look at our market, it's mostly driven by foreign investors, unless now we have introduced one share rule where we might see a balance. But previously, foreign investors used to drive the market. So when they are pulling out, it means they are selling. These weekends NSE prices, because them they want to sell before NSE is affected completely by big economies, and which may push prices further down, and they are not able to sell. So if you look like back in 2008, when there was a global financial crisis, we had an issue with NSE where most of the shares heavily crashed. You find the prices went way below what we can see today. So that time we had a bearish market, and that is the best time to get in. Then we have political events, and our politics usually have a big effect on our NSE. Sorry to tell you that. First of all, elections. There's always the fear of violence, and also new government coming in and changing policies, especially on tax. So you find investors want to sell. Like you find now, between now and early 2027, most people would want to sell because they don't understand how the market works. When you buy shares, they are there for eternity. Quantity doesn't change. It's only the price, which either way will go down at one point, it will go up. So most of us who may not have the knowledge on NSE, they may think when we have elections, their shares will get lost. So they want to sell. Again, we overshoot demand, push the prices down. Then there are tax laws, like you have seen with the finance bill, what it does. I think there is one which I think last year, which we rejected. So those tax laws, they affect companies directly. A good example, you introduce tax on alcohol, that will have direct effect on East Africa breweries, because it means there will be less consumption because prices will go up. Also, you find even a beer itself will struggle to produce those alcohol. What happens? Prices starts to go down. Then there is government debts and also budget issues. So you find at that point, we want to run to boards, especially when a government issues a new board, or we find boards have a favorable rate than NSE. We want to sell, run into boards. Again, there is no supply. Sorry, there is no demand. What will happen? Again, prices down. And as I said, after some time, you find the market recorrecting itself. It's always advisable when you're investing and you notice the market is going down. NSE 20 share index is going down. Just get the list of the shares that are within that index. Check what is affecting them. It could be something temporary, which may take maybe a year or a few months to recorrect. So you may end up selling shares, make losses, yet market after some time, it will recorrect back. By that time, you have already lost confidence in NSE. So bear market is never permanent. It's always a temporary issue. And if a company price continues to go down, there's a point where CMA will always suspend that share so that you as the investor don't even lose more. Because you remember you are panicking, you want to sell even at a lower price, you are losing. Where bear market means the market is going down, it's not always a negative thing. It has its own opportunities. It's during this time you find those people who know the market want to get valuable stocks at a cheaper price. Companies like Stanchart, EABL, Williamson T, Captura, the ones which are expensive, remember the prices will have gone down during bear market. So what does that mean? There is an investor who you see that as an opportunity to buy raw and pump a lot of money, buy a lot of shares, then target when share goes up. They can decide to sell, or if the company is giving dividend, as we have said in the previous session, and that video is already live on my YouTube channel on how millionaires were made. They will wait for dividend and reinvest. Again, growing their portfolio when we are panicking to sell. Then during bear market, always have defensive stocks. Defensive stocks are those stocks that survive tough times. Most of them, one of them is banks. And I've always said, bank stocks, they give dividend apart from housing finance. All the others give dividend. Why? Banks will always make money irrespective of the economy. They have loans which we are servicing. They have people who are depositing money, they are charging fees. So you find they are really affected. Even when there are political instability, you find people, instead of holding money on M-Pesa, you want to move it to the bank because you know it is safe there. So banks are still making money. Counters like Safaricom, it is supported by M-Pesa. That time you're using M-Pesa. So basically, that counter will not be affected. You need electricity. So shares that are the utility, they are good to buy because they survive tough times. You find their prices are not affected at all. So during bear markets, smart investors, they usually look for valuable stocks to buy at lower prices. Those good companies that you feel like right now, I may not be able to buy 1,000 shares. I can only buy maybe 10. That time prices you have gone and down and you're able now to buy your 1,000. Hold. Don't ever even think of selling. When you get to those good stocks that give high dividends at cheaper price, never even think of selling. Because you never get another opportunity of getting them at a cheaper price. So a good reason, so during bear market, try to think of buying shares at a cheaper price. You find yourself creating a very good portfolio that in your retirement, you have some million somewhere, just created with just few investments. Because you're buying these expensive stocks at a lower price. In the future, they go up. So how do you do portfolio modeling during bear market? Remember, during bear market, we have said prices have gone down. And again, for those who are new, portfolio is just a basket of your investment. Shares you have bought, bonds, money market fund, land, a house, all those are your portfolio. In NSC, portfolio refers to the shares you own. If you got portfolio valuation, that is your investment. So during bear market, play defensive. Buy stocks that are not affected. Hold stocks that are not affected. Then when you want to buy, just monitor the market. If it is still going down further, that is the time now to start buying. Even the shares that you already have in your portfolio, that is the time to add more. Actually in bulk. Why? To average your costs down so that the average price and average cost you see on your portfolio significantly goes down. When market recorrects, remember market value will go up. Again, you move from red, you pass orange, you come to green. And that's what we would want to see in your portfolio. Your portfolio blinking green, meaning profits. But remember, you have not realized this profit until you sell. So if you are looking for short term, during bear market, that's when you buy. Then when market starts to rise, and especially when we now start getting into the next phase of bullish market, that's when now you start selling. Huh? So as a short-term trader, or somebody who is just looking for growth, or somebody who is just looking for capital gains, you play with bear market and bullish market. During bear market phase, you are buying. During bullish market, you hold until prices go up, then you sell. You make your gains, wait for the next phase. And you don't have to wait for many years. Every year you'll find there is an instance where we have a bear market and a bullish market. Like just the other month when companies were announcing results, most of the companies reported profits with dividends. We saw market rising. Huh? So you find these conditions are not permanent. Huh? So again, in bearish market, hold more cash in readiness to buy when prices fall. And where do you put that cash? Not in your pocket. Put it either in money market fund, rates are still high, or government bonds. Then when prices fall down, sell, come and buy shares. You can also put in call accounts or savings account where you know you can get that money easily. When prices dip, come now and buy shares at cheap prices. Huh? Then during bear market, it's always advisable, put part of your money in government bonds because interest will still be paid. Then focus on dividend paying stocks. That's why in my tutorial, I think this is the 10th training on NSE. I always advise on dividend paying stocks. Remember, dividends, you're not selling your shares. It's companies which are giving you profit. Always have a big portion of your investments with defensive stocks. And I've said most of them are in banking sector. Also agriculture, unless it's a period where you know will be affected, but I have never seen tea. We'll come to that. I've never seen tea affected by weather. We have Kapchorwa, we have, is it Williamson tea, we have Sasini. Banks, unless another policy comes in, banks will always be making money. Even if they report a loss, that's just their papers. Just go in and ask them, they are making profits. So focus on those dividend paying stocks. Whether economy is up or down, people will still drink. People will still smoke. BAT, beer. Buy shares. Have them there. They will pay you dividend even in bearish market. And remember, when this dividend comes, you are targeting now the stocks which are foreign with a huge margin that you cannot be able to afford during a bear market or a stable market. So accumulate them when the prices are low and never sell them. When you buy a stock at a lower price, never sell that stock unless you have an emergency. Even if you have made capital gains, never sell if it is a dividend stock. It's always an opportunity in the market once in a lifetime. So like in 2023, when NSE weekend, most of us went to money market fund, and I think that's when most people started studying money market fund. But what is it? You are giving a fund manager your money. You don't care where they put the money. Then they go and invest. They are only allowed by CMA to invest in short-term, less risky products, like government bonds, treasury bills, and also commercial papers, overnight trading to the banks and corporates, big corporates. Also providing liquidity in the form of market maker where money is needed, but they get interest. And many other areas as long as they are short term, because their money is needed as and when you as an investor need it. So they need to have that liquidity aspect of it and have an asset that they can sell without making loss to refund you. So you find that time, that's when people want to buy those funds. So you deposit your money, fund manager goes and invests, then you're getting your interest. But the interest that they show you is not actually the actual interest they get in the market. Do they charge you fee? Most of them they don't. How then do they make money? It means the interest they are showing you is not what they are getting in the market. They could be getting 3 times that, but they decide to give you the portion that you agreed. So that is on money market fund. And with that, then why would you invest in shares? Remember, shares prices are never predictable. You can wake up to on Monday, you find Safaricom is trading at 500. That's more than 100% increase that you can't get in money market fund. So that's why NSE 1 is the best for growth, capital growth, and also for long term, because you're buying a company ownership. Unless that company closes its door and it is delisted, your shares and money will still be there. So we go to bullish market, and if you have any question, put on the chat. Let me see if there are questions. I'll come to the questions at the end. I'll talk about KCB, but never be worried about some of these price drops. KCB, if I may talk about it right now, they just closed their books. Book Russia was, I think, let me check my calendar quickly. They just closed their books for dividend. And what happens on ex-dividend date? Ex-dividend date is 1 day after book Russia. Prices readjust with dividend. So if it was trading at 40 and dividend is 4, it will go back to 36. But again, remember that day is always called, it's usually called open day. That time you can buy a share even at 1 shilling. It is open, there is no price limit. If you make a mistake and there is no supply and you want to buy, you can buy at the highest price. Then when the market recorrects, you realize I bought at a higher price than the market. During open day, that is ex-dividend date, always be cautious of the price. And that time, that's when counters usually recorrect. I believe on actually on 4th. From 4th was when? Let me see my calendar. 4th was on Thursday. So Thursday and Friday. Thursday, the prices went down because of the correction of dividend. Remember, book closure is on 3rd. Ex-dividend date is 1 day after, on 4th. So 4th, prices went down with the same margin of the dividend. Then, as the investors, we also want to keep to sell that time and exit. Again, we push the prices further down. And this effect, you see it between now and the payment day. You see the prices fluctuating for KCB between now and payment day. As a smart investor, don't try to sell because you might end up selling at a loss. That is up to 11th November. You will see the prices of KCB dipping even, but from after payment, market again recorrects. Hopefully by that time, maybe that time, we have foreign investors coming in. You know, that's the time now they start buying shares. For them, they are smart. During book closure, that's when, after book closure, that's when they start buying because they know prices are down. When companies start announcing results, they want to exit to sell because the prices are up. But I'll come to Q&A, so remember to put on the chart. So we have seen a bearish market, and we have said it's when most of the stocks prices are going down. And here we are not talking about one share. We are talking a group of stocks. That's why I'm referring to NSE 20 share index, which have the top 20 performing stocks. So if it is going down, it means the top companies within that index, their prices are going down. Majority of them. It's not just one share. So then what is a bull market or bullish market? Bullish market is when prices now rise strongly and keep rising for months or even years, depending on the market. But for NSE, you'll hardly see in years, it's months, because we'll always have something affecting the company, then the prices go down. So you'll find NSE 20 share index again have shot up with a huge percent, let's say 20%, and keeps on increasing. That time we have a bull market. So when you hear bull market, the market is performing well. It means the top 20 companies which control NSE, their prices are increasing. These points you can always have shown you where to get them. Price list, you scroll down, NSE 20 share index. You only need to compare month by month and see if there is that huge movement. If there is, then we are in bull market. You can also compare within the month or for several months or even years. Again, analogy, the bull name is borrowed from the way the bull rift it's on. You know, the bull rift with full energy. It's the same thing, prices shooting up at once. So it means investors, we as the investors have confidence and we are buying shares. Again, demand overshoots supply, pushing prices up. So some of the contributors, one of them is the economic growth. So when Kenya economy grows, when you hear, is it finance money, CS for treasury. When they say our GDP is growing, it means Kenya economy is growing. That time check NSE. You see most of the companies are improving in price. It means that time companies are making more revenue, they are making more sales, and they are making profits. And that contributes to share prices rising. Why? Because we as the investor now have that confidence with the companies which are making profit. Remember, they might give a dividend. So you want to buy and lock in your dividends early. So you push prices up. Again, banks will also need more. People are also spending more, which means what? Companies listed at NSE are making sales, and that is good for NSE. So you find the market starts moving up. A good example, we have seen Safaricom, even Equity, KCB, and other shares performing well during the economic growth. And these are the contributors of NSE 20 share index. Then, like we had, as I said, last month, I think for the last, is it 2 months, most of the companies have been announcing their earnings. Half year results. So you find that time during earnings season, most of them will either announce a profit or loss. And any announcement have an effect on their prices. So if a company announces a strong profit, then we as the investors will get in to buy. Why? You expect that company to announce a dividend. Again, demand overshoots supply, prices start to rise. Like if you take an example, Equity Bank reporting a growth of 20%, you expect its share price to go up, especially that day they are announcing that they're making that announcement. And especially like what I said, when they are doing profit warnings. If there is an extraordinary profit that's being reported, it will have a very huge impact in the market, and you see the prices shooting up because that day brokers are allowed to open the market. NSE have already opened. You are not limited to 10%. So prices go up. We are heading in a few months to holidays. We expect most people to enjoy themselves. I hope you understand what I mean. During that time, you find EABR is making profits. By the time they are coming to announce their results, they are announcing a dividend. Again, you want to buy. Price goes up. These days, I think everybody is on M-Pesa, even those who had pulled back and they said they are not on M-Pesa. Everybody is on M-Pesa. Everything you do these days is M-Pesa because it is accessible to everyone, meaning what Safaricom is making money. And that's why I always say Safaricom is not supported by data and voice. It's supported by M-Pesa. They announced, I think they are doing partnership with Meta, which owns Facebook, WhatsApp, and Instagram. That just announcement, when they make it, you see prices moving up. It's an innovation. It shows there is growth. So we expect more revenue from their partnership. So you see Safaricom growing in price and growing in profits, which means dividend going up. This can spark rallies where people want to buy. Again, push prices up. Then we have foreign investors coming into NSE. So you find funds from outside, they want to invest in NSE. So you find foreign investors, they are placing more buy trades than we, the local investors, on our sales side. Again, demand overshoots supply. Price shoots up. Remember, for them, they don't come for a specific company. They usually do their own analysis and they come with a basket of what they want to buy. So you find they are picking most of the NSE 20 share index companies that are within that index. That's what they are buying. You find it shooting up. Meaning what? Now prices for most of the companies quickly jump. So again, this is a bullish signal. The other signal is on IPOs, when companies are listing for the first time. As I said, company, if it wants money, it is not at NSE, it wants to raise capital, they can come to NSE through IPO, like what happened with Safaricom and Akita Kenyari. Initial public offer. When a company is selling shares to the public for the first time. So during that time, if it is a good company, we all want to buy, like what happened with Safaricom IPO. So you're excited to be a shareholder of this company, even if you don't know what they do, even if you don't know what IPO is, you want to put your money there. So in 2008, when Safaricom was coming, it launched during a bullish environment when most of the companies' prices had gone up, and it attracted most of investors. So you find during bullish market, IPOs and right issue will usually perform well because people want to be associated with performing companies at NSE for growth and also dividends. So there are sectors that contribute to bullish market. Remember, for bear market, it's not the sectors. Any share can be affected. But for a bull run, there are most of the companies, there are those that contribute to these because they don't all appreciate the price equally. So you have banking. When they are reporting good profit, big profits, you find their prices go up. We have several of them listed at NSE. It means prices going up. We have Telco, Safaricom, M-Pesa growth, and I think now with Meta coming in, if that partnership materialize, then we expect Safaricom prices to also shoot up. Then we have breweries because of beer sale. I've never seen in a year or even a single day when people have not taken beer. Even if we say we close the bars, you still find people drunk, meaning what they are getting from beer, unless now they also have other competitors. We also have utilities like power. I think all of us consume power from Kenya Power, and that power is provided for by Kenyan. So Kenyan provides power to Kenya Power distributes. So you find both of those companies performing well. In NSE, we don't have any water utility which is listed, but hopefully in near future, we'll see them listed. So we have something called momentum investing during bull market when prices are going up. Momentum is buying what is already going up. It's not bad to buy when shares are up. You still make your money. Remember, you're targeting wealth. In the previous video, we said we are creating wealth. We are not coming here to make money. In NSE, if you want to lose your money, come with the mind that I want to make money. You will buy, yes, and sell when prices go up. Buy again back, sell. But are you factoring costs? Because that eat into your returns. So we said we are creating wealth. Just buy. When you have made enough profit, that time you can decide, let me sell portion, not all of them, portion. Don't withdraw that money, buy another stock that have gone down. If you don't have extra money, you can put in. If you have extra money, don't even try to touch that share. You come in, fund your account, buy more shares. Why? Shares you can pass over to your beneficiaries as well, and they continue trading with them. We have said before, the way shares are transferred from you to your beneficiary is either you giving gifts to your beneficiary, who could be your children, or through will, you just decide I will share my wealth this way, have it recorded in the court, and court issues directions to the broker. Or if you have not left will, administrators can sit down, agree with the beneficiary. How will you share? Then they go to the court and decide. Either the shares are transferred directly to the beneficiary, or if they have not agreed, they are transferred to the administrators in their names joint, which is risky. Or you open a trust company which holds shares on behalf of your beneficiary. When they agree, they can be transferred. If they don't agree, remember dividend is still paid to the trust account, trust company, which already have a trust bank account. Meaning what? You're not losing your dividends, you are not losing your shares. So when you come to the market, come with that mentality of building long-term wealth. I shown you how millionaires were made. Peter starts with small, then shares with his children. They continue adding, then they share to the grandchildren. By that time, maybe they are passing billions to them. They're already millionaire and they continue building the wealth. That's why it's very important to introduce your children very early. In AIB, we have minor accounts. When they understand, then your wealth will never be lost. So in a bull market, you continue buying when prices are climbing. Remember, there are times the prices will go down. You don't need to panic. If you're looking at long term, or actually don't never look at the prices. If you're looking at capital growth, or if you're looking at capital gains, that's when you look at the prices. But remember, always factor cost. So you find during momentum investing, people want to ride on rising prices. They want to buy more. But remember, when you are buying, always check. There are graphs. Always check what is the highest price that counter have gone, so that you don't buy at its highest, then you are stuck there. So if you find a share price is at its highest, just go to another stock. Remember, we said don't put all your money in one share. When now that counter goes down, you can now start adding more. So then how do you model your portfolio during the bull market? Remember, prices are going up. This is the time you take risks to grow your wealth. So during bull market, you're taking risks. But if prices have not risen to the highest levels, then you're not taking risks. So you put in growth stocks, stocks that have a future, and prices can go up. If you're a conservative investor, then try to move to ETFs or rates. Rates, they trade over the counter. We don't have them on our side, but they are there at NSE. ETFs, in NSE, we only have two. Gold ETF, which tracks the price of gold, but I have not seen any gains from it. There is a new ETF which packages international stocks, Akina Meta, Microsoft, Apple, Nvidia. Then they are sold as one unit, because that is a role of ETF. Basket of shares sold as one unit. It's like when you go to the market, you have an opportunity of buying individual products. Or if that supermarket packages all the products into one, you can buy as one unit at a cheaper price. So ETFs is a basket of shares sold as one unit. So you can buy like the normal way you buy shares. They trade the normal way you buy shares. If they give dividend, you'll be given. But the beauty of ETFs is that when some stocks within the ETF prices are going down, the others which are going up. When they average, then you don't make losses. But as I've said, in NSE, we only have one realistic ETF, which just came the other day. And we are still observing to see if, because most of the stocks within that ETF, they give dividend. So we are just observing to see if it will start giving dividend. If it does, then it's a good ETF to buy. So in this case, then you move to international markets. There are ETFs and stocks. AIB, we are offering that. And hopefully in the next 1 month, once we integrate with our digital platform, you should be able now to buy even fractionals. Fractionals, for those who don't know, is that you buy a fraction of a share, 0 points. Remember, you can buy one share and above. In the international market, you can buy a 0.1 share of Nvidia. So hopefully that we can now onboard on our digital platform. Again, during bull market, reduce your cash. Don't sit on the money, because remember the market is going up. You may end up, by the time you're getting into the market, it's at its highest. And maybe that time, the economy is doing well for some time, that you'll be stuck with your money. You don't want to buy when the market is up. Good example in 2021, when there is a bull run. So most of the people who bought Safaricom and APR, they made good gains when they sold. Remember, you have to sell to make these gains. So during bull run, always have aggressive allocation. And always, in all phases, have defensive assets. One of them we have said, banking stocks, utility, and we have government bonds and money market fund. The other risky products which you can invest in, like CFDs, cash for difference, contract for difference, sorry. But ideally, it means the same thing. You're speculating on price movement of shares. You don't own the shares, so you're gaining by the price difference. That's why it's called contract for difference. Then you have Forex, where you're playing with Forex rates. But those are the risky products. There is also other long-term investment products like insurance savings plans, insurance-backed. I think they also have other funds. So that time you can move part of your money to them, just to have that caution in case you need money urgently. So that is on bullish and bear market. Hopefully now you understand the difference between the two. Bearish market significantly going down. And when I say market, it's not just one share. That's why I picked NSE 20 share index. Top 20 companies prices going down with a very huge margin. Where bullish market is when the same shares, their prices are rising sharply. And each has its own opportunities. During bullish market, that's when you make money through capital gains. You sell high. During bear market, for those who have been looking for capital growth, that's when you buy. During bear market. So bear market for capital growth. And there is a difference between capital growth and capital gains. Capital growth is where you're buying shares at a low price, hold for them in eternity, but prices keep on moving. So when you decide to sell, you have sold at a higher price. Capital gains is when now you do the actual sale. You get those profits. So that's on bear market. Bullish is now the opportunity for the people who have been looking for capital gains to exit and maybe look for move that money maybe to other assets, or wait for market to recorrect, buy low again. So we go to the other market conditions and how they influence the market. I want to quickly go through this, then we come to Q&A. There is another market condition called sideways or range-bound market. These, I think you have witnessed it most of the time. So a sideways market is when share price don't move much up and down. Remember for bear, we have the 20% change, and also for bullish. When there is not that huge movement up and down, it's called sideways market. It's just stuck in a narrow range. That is the time short-term traders get into the market. Buy low, sell high, buy low, sell high. So if you notice maybe Safaricom is stuck between, let's say, for argument's sake, 20 to 22, you buy. Then when it rises up, you sell. You make gains with the difference. But again, for short term, it requires a lot of money because you need a lot of shares to realize those huge profits. So you find NSE share index also stagnating within a very narrow range without big change. So during this time, you buy low when it is at the bottom, sell when it is at the top. So that's what is called short-term trading. For long-term investors, you just hold on the shares you are just collecting dividend. If prices are still low, you continue adding. So long-term is where you are not intending to sell. We also have volatility spikes. Volatility is how fast or widely prices move. And this may happen during uncertainty. Like tomorrow or Monday, government wakes up with a very crazy announcement on policy that affects the market positively. Prices will move up. Then they don't implement the following day, prices shoot down. So a good example is when you have elections. Due to that fear of instability, you see a sudden drop. Or if it is like the time our late president Moi was handing over to our late president Kibaki, there was stability that time. We saw market, some of the stocks move up, but for just a duration, because you don't know now the new government, what policies they bring in. Then when there is a currency shocks, when you see shilling weakening sharply against dollar, it affects the market. Then after some time, when that condition recorrects, you find the market also recorrecting and bouncing back. Sorry for that, I was just taking a cup of water. Then there is liquidity crunches. Liquidity is how easily money flow in the market. You have heard stocks are more liquid, but money market is more liquid than stocks. Pension savings plans, they are not liquid. What does that mean? It's how easily you can get your money from those products. High liquidity means you can get your money easily. Shares you can sell and get your money in 3 days by regulation. But AIB, we have an option of paying you early with a charge. Money market fund, you can request to withdraw anytime. Bonds, you can sell anytime as long as you get somebody to buy. What about pension? Audition is usually you have to leave your current sponsor if you're sponsored, if you're employed, to get portion of it. The other one you get in retirement. Again, depending on your plan, if it is lump sum, you get full money. If it is drawdown plan for pension, then you'll be paid like a salary when you retire. So that's why they are not that liquid. So that's what liquidity means in investment. So if a government borrows heavily through treasury bonds, we said treasury bonds is you're giving loan to government, you're giving money to government. There is nothing you're exchanging with them. Remember, for shares, you're giving company, they give you the shareholding of that company. For loan, you're giving government money, they are not giving you anything in return or even a collateral. So if government is borrowing heavily through selling treasury bonds, because that's how they raise money, either through treasury bonds or through short-term treasury bills. So investors, you find they are putting their money there instead of stocks. Why? Because maybe government is giving favorable short-term rates. So you may find at that point, because we are shying away from the market, then stock market may slow. So whenever you hear government floating a board and they're giving favorable rates, that's the time for you as a smart investor to prepare to get into NSE. You find markets have gone down. While them, they are chasing the 17% interest. You are looking at long-term growth. Buy shares when the market is low. So less liquidity means there is a few buyers, and then that weakens the share prices. And I hope we are running something. Today it's a bit theory, then we go to a bit of a practical at the end. Then another item that may affect prices is regulatory announcements. NSE is fully regulated by Capital Markets Authority, CMA. The way it works, let me just give you maybe a brief history of NSE. NSE started with brokers. Brokers will go source out for the clients, for the companies that want to sell their shareholding. They go source for the client, come with a paper, go to NSE with that paper, agree with another broker. That's where the name broker, stock broker came in. Agree, I'll give you this number of shares, give me money. That is on paper, they agree. Then broker will come and allocate in their books. Then you as a shareholder, you're given a certificate to show you own the company. You're given that certificate by the broker when the transaction is completed. Then after some time, they decided, instead of us doing this manual process, let's automate this trading. Brokers themselves, they formed NSE, and now we started trading at NSE. So NSE used to be owned wholly by the brokers. They're the ones who formed NSE. Then this market, remember, it's digital. It doesn't have regulations. That's where the CMA came in. Then after some time, brokers decided to sell 70% of it to you as the public, then they retain the 30. That is the current state of NSE. 30% ownership, brokers, 70% by the public. During this digital trading, nobody could trust each other, the brokers. They decided, we have another entity called CDSC. CDSC is owned not by the brokers, it's owned by other entities. So that's where the shares are. An independent entity from the brokers. They can't have any interference. Then these companies, yes, they are listed, they are trading. They need somebody who can represent them in the market. That's where the registrar comes in. So the market have all those players. CMA to oversight the market. Then we have CDSC to manage your CDSC account and shares. Then you have NSE for trading. Then we have the broker, which acts as a link between you and the other investor. So basically, CMA, NSE, CDSC registrar, they don't play an active role interacting with the client. It is the broker. So the broker will receive the money, receive the order, execute, transfer the money, and make sure the shares are credited in your CDSC account. That's it. So regulatory announcements can have an effect on the market. They can move market with the new rules. Like when they suspend shares for trading, you find all of us panic. They suspended Transcentury because of a court case. They suspended Mumias again because of politics in Western and also court cases. And they suspend these in your interest so that you don't lose your shares. Remember, number of shares we said cannot be reduced unless you, as the investor, you are selling. But remember, they are losing in value because of these constant court cases, people panicking, pushing prices down. So they will suspend. Once a share is suspended, we always think they will also suspend even the other shares you want to sell. Again, price goes down. Interest rates, they will affect banks and borrowers. Meaning what? Banks reduce profits. They don't give you dividend. Prices down. You are not able to borrow. There is no money in the economy. So what means what? You're getting back to your pocket to foot your bills. Meaning what? The income that you'd have saved in shares, you're moving it to your consumption. Then budget, when they introduce taxes, you find those taxes, they're affecting the companies directly. Tax on beer, tax on consumer products, tax on airtime. It's affecting those companies. Safaricom, EABL, you find share price going down. But as a smart investor, this is always the time to time the market. So during liquidity crunches, we have said share price goes down. Smart investor, time. Watch out for any regulatory announcement. If it is negative to that company, expect some price drop. Get in. Then when there is inflation and food prices change, always expect the market to be affected. Our market is affected by many factors, not just those that I cover today. If I was to cover, I can take forever. So inflation is when there is a general rise in food prices and goods. So when inflation is high, remember we need to survive. We are spending. But we spend on essential goods. Which means what? Most of the companies which are listed at NSE, you find we are not supporting them. Again, they make lower profit. Prices goes down. You don't want to put your money in bank. You want it to be in a liquid form where you can buy products. Money is circulating. It's not in the banks. Banks are not able to read. Then, again, this time you find, as the investors, we want safe havens. where you can't lose money, where you are guaranteed. So you go to bonds and money markets. Where you are guaranteed of interest. So you shy away from the market, pushing prices down. But as a smart investor, what have we said? That is the time to get in. So when the others are shying away from the market, it's now opportunity for you to buy expensive stocks cheaply. That's just an example. I don't want to go through it. Where let's say price of Uga goes up. Would you spend on buying beer and airtime or providing food for the family? It means beer now that time it will suffer. Price goes down. Airtime, Safaricom. But remember Safaricom, we said M-Pesa. It's the one that's supposed to it. So you find some of these companies, their share weakens. Prices go down. But that is the opportunity now for you as the investor to buy. We also have an exchange rate between Kenya shilling and USD. It affects the market. So if a shilling weakens, that means a weak shilling is where $1 is at a higher Kenya shilling. It's bad for importers. Remember, they are paying more. And who are these companies which do manufacture? They are the ones which are listed at NSE. They have more expenses. They are not making profit. But again, it's good for exporters. Tea, coffee, horticulture, they earn more in dollar. What does that mean? Companies like Sasini, Williamson Tea, Capchuoro, they are making money. But again, there are companies which are suffering on the other side. So this is the time to buy the stocks which prices are going down. And the ones which have appreciated because maybe of performance, that's the time now to offload them. But remember, if you hold the shares, they are dividends. So when Captura is making money because of good exports, then expect them to give you a good dividend. This time you'll also see foreign investors want to exit the market. That time they are selling to avoid making losses. Again, they push prices down. It is your opportunity now to buy low. When they come, remember they push the market up. You sell back to them at a higher price. So during neutral sideways market, that's when the prices are not fluctuating a lot. You focus on stability and income. So here you have to balance your investment. Put some money in shares, part in bonds, and part in money market fund. Dividend stocks, never sell them, because you will run whether price goes up or down. Dividend you still get as long as the company is making profit. And always have some cash ready. When opportunity comes and prices are lower, hit the market. And when you hit, now wait for the next bull market. When prices go up, you can exit if you're looking for capital gains. So I hope so far I've covered what most of you have been asking. Capital growth, capital gains, and dividends. At least now you understand. Dividend, free cash you are getting without selling your shares. Capital growth is when you buy low, shares appreciate in price, but you're not selling. You're waiting for the next time the prices will go down for another counter buy. Then when you make enough profit, you can sell. That time now you get capital gains. Capital gains you only realize when you sell. So you come now to buy and sell signals. When do you buy? When do you sell? They are technical. You can use technical indicators, and I know most of these tools they are available. If you go to tradeview.com, I think you can find NSE shares. I'll try and check whether we can find them. Some of these platforms, they have relative strength index, moving average. They also have moving average convergence and divergence tools to measure the market. You can use them to know when to buy or sell. So you start with a relative strength index. It shows if share is overbought or oversold. That is, if it is overbought, then it is too expensive. If it is already oversold, then it is too cheap. So you can use that. But you come to that next time. I don't want to go to practicals today. Today I want to first cover theory. Then next week, we do most of them in practice. Then moving average, convergence, divergence, it shows if the trade is changing up or down. Remember, you need to know whether market is going up or down. But even with the look of the eyes, you can see the trade in the graph. Then you have moving average, it's average price over days. It will help you see the trade direction, whether shares are rising or falling in price. So if a share is overbought, it's a signal to sell because you already have demand and prices have gone up. Again, if it is oversold, then it's time to buy because again, prices are. I don't want to go into details of these because again, it would take more time. There is much to cover today. Then the other signal for buy or sell is volume surge. Volume is number of shares that are traded every day. If you notice a certain share have a sudden spike in trading volume, it is signaling interest from investors. Very big interest, meaning what? Prices can shoot up. So if you go to our online portal, for any stock you click on there is, for each row, there's always 3 dots. You can see more details. Just check the trading volume or volume. If you notice, you compare with time, you notice there is a spike, then there is an interest in that share, which signals what? Price might go up. Sorry for that. So a sudden spike in trading volume may signal something big is coming. It could be news, it could be results, maybe in good results, takeover rumors, or even politicians coming in. That's why it's very important to check why this spike in trading volumes. Why? We have found some stocks spike over time, KPLC. And it was in news, one of the politicians mopping shares in the market. With that announcement, everybody wanted to buy KPLC. Price shoots up. We had housing finance the other day. Again, political class exposed. They have interest in that. Were it not now for I think there is a court case, you would have seen housing finance shoot up. But is it a good stock historically? Is it giving dividend? It is in it is in the banking sector. Why doesn't it give dividends? So you need to always check, is it a rumor? Is it an actual event that is affecting the company, or maybe good results or bad results before you get in to buy? Because poor results will signal prices will go down. That is not like a time to sell. It's time for you to wait the prices to go down, buy. But again, check what is affecting. You don't go the route of Mumias, where you are stuck with a stock that until now the regulator makes decision to unsuspend, you can't do anything. But your shares, again, they are not lost. So again, for bearish, we said just prices. But again, when volume rises with the price, it's again signaling bullish market. So if you see there is a sudden rise in volumes for most of the stocks, and prices are also going up, then we are in a bullish market. That's the time, I'm headed to sell at one point. However, if volumes are rising but prices are falling, it's a bearish market. Because maybe people are selling. A lot of people are selling. It signals what? You wait. When market levels down, you buy. Or you continue buying because we said there is a averaging of the cost. Another signal on buy or sell is dividend declaration dates. Dividends are declared by the companies, then that information is circulated by NSE. That company that is announcing dividend intends to give its shareholder part of its profit, either in cash sent to you directly by the registrar or in form of additional shares which are credited to your existing shares. In that declaration, there is announcement date, there is book closure, and there is payment day. So announcement day is the day that announcement have been sent to NSE for public. Book closure is the date you need to have shares. The total you have on that day is what you'll be paid dividend. We said X dividend date is 1 day after. That is after the books have closed. So the share is trading X dividend. Then payment day is the day registrars release money, but it's not the day you receive. It depends on the mode you select. If it is bank, they pay EFT, so you get the following day. If it is M-Pesa, it's either the same day or within that week because they pay in batches. Remember, you are millions of you. So when dividend is declared, you find most people want to buy. I will come to this dividend. I will show you a calculator which you can use to know when dividends are announced without having to go to NSE price list and read those terminologies. So before book closure, immediately the announcement is made and the book closure, most people want to buy to qualify for the dividend. You find the prices start to rise up to and including the book closure dates. That day you find the share is trading at a high price. Then on X dividend date, it's open day. That time you find the prices readjust with the dividend amount. If dividend was 11 and share price is 500, it will go down to 499? 489 from 500. 489. You as the investor don't need to worry. That is by market the way it is structured. The following day, every share have to factor the dividend. It's called dividend dilution. You have been paid free money, so the share have to recollect. If you sell, you lose. Then the following day after X dividend, you see the market have stabilized because 10% rule is returned. And now market forces starts to play effect. Demand will push up. Supply will push down. On payment day, you find now after that, the share now stabilizes. And you may find it you start going up depending on the company performance. That's why you don't need to panic. So the strategy you can use here is you buy even before book closure, even before announcement date. If you know a company have been giving dividend, buy before announcement date. If you have not bought, buy before and including book closure date because it is inclusive. Then you have a decision to make. You either hold to get dividend, so you don't sell on book closure, or you decide to sell on book closure and take capital gains, but you lose dividend. So those are two decisions you make in the market. You hold, that is, you don't sell on book closure. You're entitled for dividend. And don't sell after book closure because you make losses. If you want to add more shares, buy X dividend date now going forward. Prices are down, you add more shares. However, if you realize by selling you get more money than waiting for dividend, sell on book closure when prices are high, not on ex-dividend date. So you take your capital gains, but don't withdraw, return now to another stock. So another thing that plays in the market is earnings seasons. They play a very great role when companies are announcing profits. We have had that in the last 2 months. We have seen companies announcing their results. A strong profit will signal price jump. So that day they are announcing, prices again they are open. 10% rule is usually removed at NSE. Brokers remove it. Means you can buy at any price and you can sell at any price. And that's why you see a sudden spike in price or a sudden drop because there is no 10% rule protection. So strong profits, price jump. Weak profits, again, price fall because we panic, we want to sell. So for experienced investors, those who have been in the market, they usually have that timetable when companies are announcing their results. They buy before announcement. If they know the company will make profit. And how do they know? Insider information. Talking to the people within that company. What are they saying about their own results? Listening to news. You can see even earlier, people coming to news or even in a news anchor saying EABR is doing well. Even before they announce their results, you expect them then to announce good results. You get early before prices go up. So you buy before earnings, then you sell immediately after announcement, only if that company is not giving dividend. If they announce a dividend, then hold. Book closure, now make decision on that day. How much am I receiving as dividend? How much would I receive if I was to sell today? Compare. If selling is better, sell. Then the following day, because you get credit immediately. We will give credit on sale. You get credit immediately. The following day, when prices dip, buy back at lower price. Then wait. So you forgo dividend, you get capital gains. Or you decide, let me just take the dividend. Or selling again their costs and buying back the following day their cost. After you factor, you realize dividend is better. So don't sell on book closure. You hold your shares in eternity, creating wealth. As I've said, there is insider information and also something called institutional moves. We usually disregard these, but it is the truth in the market. It plays a lot of a great role in price movement. Insider information, company managers and directors, they already know what they are reporting. Top managers, talk to finance guys, they will tell you. Talk to the auditor, they will tell you. Look at some of influencers who do analysis of these companies. They will post even before the company posts. Even if it is rumors, most of them, they usually get this information from the company themselves. They always talk to the company management beforehand. Our research team, they always visit some of these companies. That's why when they are telling you what to buy or sell, they already have that information from the company management. That's what is called insider information. Information that is not out there in the market, and it's not market malpractice. Remember them, they went their way out to go and talk to these directors. So that is not market manipulation. Institutional fund managers, pension funds, foreign investors, insurance companies, they also play a very great, when you see they are buying shares, they have information on that share. So if you go to our portal, you see foreign trades. There are more foreign buys than sales. That is the time for you to buy because they expect there is no way a foreigner can put money in NSE to lose. If you realize there is a huge volume traded, and you go to market depth, you realize there are few orders, then that tells you these are pension funds or other companies, insurance companies who are buying shares. It tells you they expect something. They have done analysis. They don't just buy. They have talked to all brokers and made the decision. That is also time for you to buy. So if you find institutionals doing heavy buying, then it's a good sign. They have confidence in that company. It's also time for you to get in with them. If you see news, a big institution buying shares, not an individual, big institution, then there is something coming out of that institution. Not the individuals. Individuals, we also have our own politics. So if you see a big institutional investor buying shares in a company, it's also good to follow because again, but remember, per CMA rules, insider information is supposed to be disclosed for large transactions. That's why you see when a transaction is being done and it is leaked out, that transaction is usually stopped if that disclosure was not done. So always watch news, look at business data and also social media for those announcements. Because they signal a lot. A good move by just a single large institutional investor signals confidence in that company. It's also time for you to get in. When they exit with them. Then profit taking signals. When then do you as an investor decide to sell? Because taking profit means selling. That is when you go to your portfolio valuation and you realize it is green and it is that shiny green. I don't know whether it is right or dark. The one that shines, it signals you have made good profit. Just check price movement against your average price. If you have made good profit, that time you can take profit, sell, and don't withdraw money. Go to another stock. Revolve your money around the stocks. That is for short-term traders. For long-term traders, and I assume all of us are long-term traders, we are focusing on growing wealth. But as you grow your wealth, don't be greedy. Don't try to lock everything. Sell part of your holdings and buy something else. Then there's something called stop loss orders. We don't have it in NSE, but it is there in the international market. As I said today, I'm trying to cover both. So stop loss is a rule to sell when price falls to a set level to avoid losses. So when you're placing your buy order, you place the price you're buying it. Then you put a counter trade, but with a price. So you're adding another price at a stop loss lower than what you're buying, so that when the prices go below that price, the price you're buying it, and it continues to dip, it reaches the level you have put for stop loss, the system automatically sells your shares. But remember, you are going at a loss. For physical shares, we highly discourage because there is no way a share can go to a zero price. Never put a stop loss order for physical shares. That put for CFDs, Forex, you can do that. Because for those, you can wipe your entire investment. For physical shares, you can't. Prices can never fall to a zero price. Even if they continue falling, the best thing CMA can do is suspend. When the share is unsuspended, it will either continue trading or you'll be told how to liquidate your shares. Either the company compensates, they buy you out, as shareholders, they pay you. So that's why it is not there in NSE. Most people have requested. I hope now I've answered your question why it is not there. You will make losses. You are putting a buy trade, instructing the system to also put a sell trade when prices go down. When prices go to that price, remember, unless you stop that, it will execute. So you will realize capital loss. Huh? So then, how do you model your portfolio? Always use those signals we have talked about. Dividends, earnings, technical charts, profits to adjust your shares. Huh? During dividend seasons, hold your dividend stocks, add more to get more dividend. Reinvest that dividend to buy another dividend. When that dividend comes, reinvest the same. Huh? So you are using a dividend to buy another dividend called compounding. Huh? For the first 5 years, you never realize how your portfolio have grown because that time you're building it. Between the 5th and 10th year, you start seeing the real gains in form of dividend. From 10th year and above, your shares should be paying you a salary through dividend. When there is weak earnings, that is the time to buy. And also cut some exposure to the bank, because you know that time if you are short term, when they make raw profits, prices go down. For long-term investor, you don't need to worry. Your work is to continue buying. Then foreign inflows, that is something you need to check. Always that time, add growth stocks. So that when prices appreciate, you can decide to sell. And it is not just one stock you are checking your whole portfolio. So there are seasons in Kenyan market. Let me just check. Okay, luminous green. Yeah, that's the one. I hope it is the one on the portal. So let's continue. There are seasons in Kenya market. The one I've talked is general in all markets. But in Kenya market, there are several. One of them is dividend seasons. They are usually between March and June and also September to December. So there are companies which announce in between those periods. So that is the time now you, as the investor, you need to check which companies announce now between September and December. Start buying now. Lock those dividends. When you get now those dividends, start buying for March to June. When you receive March to June dividend, by September to December, you are doing dividend recycling. So always buy before book closure because on book closure date prices are usually high. Unless you are late, that's the time I would advise you buy on book closure, but don't sell so that you qualify for dividend. But with a caution, price always falls on ex-dividend date. Don't sell your shares. Even if price continue, even if you buy today and price falls the same day, never sell your shares. As I said, shares can never go to zero valuation unless the company is closing down. Then there is a budget season, which is usually in June. Remember, that's when the government is bringing in new policies. That's the time to see which companies are affected. If prices go down, it's an opportunity to buy. If prices go up, it's an opportunity for you to lock in gains by selling. That's why budget, as an investor, you'll be a good friend of business news. Very good friend of business news. You need them. Then election cycle for us is usually every 5 years. That time, every 5th year, expect price changes depending on the political environment. If market goes down, smart investor get in, buy cheap. market will recover anyway after calm returns. Remember 2007, 2008, was it post-election violence? It yielded. Market recovered. We are where we are now, people making gains. Those who bought that time, they are making money. And never panic in the market. During Moi's time, the market was not performing that well. Those people who bought shares that time, when Mr. Kibaki came in, then we can appreciate what he did. Most of the counters were giving dividend. That time Eveready was up. Mumias, it was giving even dividend. I remember buying at 13, selling at a higher price, and I made my gains. Before now, whatever happened after, it was broke. And you see now Eveready prices also went down. Huh? But for Eveready, it's because they don't have much innovations. Huh? You know, every innovation pulls a company out of its comfort zone. Unless they innovate, then they are stuck out. Huh? Then you have agriculture seasons. It may sound funny in the market how agriculture can play, but remember there are stocks that are listed at the agriculture sector. When it is time for rains, remember tea is up. Huh? December coffee. So you expect Akina Kakuzi, Sasini, Williamson tea, Kapchoro to make good gains. Huh? Then we have tourism season, mostly December to February, then a bit of July to September. By the way, do you have any stocks under tourism? Maybe just to ask, even if you can see them there. Yes, they are there. Remember when investors come, some of these companies, they make profit. Huh? KQ, frying. Huh? But remember that profit they're using to settle their debts. Huh? That's why while you may buy KQ, you always need to look at their debt position. Huh? Then there is a TPS Arena, I think it's also at NSE and giving dividend because they also boom during that period. Huh? So you buy early, then you sell when prices go up. Huh? Some of these stocks, you don't hold on to them. They are for speculation. Huh? So you buy before peak, sell after peak when prices are up. Then we have a group of markets spillover. If markets in the world are affected, even NSE in a way will be affected. Foreign investors putting their money from NSE, we have bearish. If global commodity prices improve, remember our economy will also improve. Companies make good profit, again prices. So always watch for some of these global news. Even if they are not in your TV, your favorite TV station, go see what is happening in the world. Then there is government or board auction seasons. This is the time Treasury is selling Treasury bills and bonds. So when interest rates are high, then you find most investors, they go to bonds because they want to lock in those quick gains instead of shares. That time prices of shares go down. As a smart investor, come in, buy shares. Remember, for bonds, you need from 50,000 and above to invest. But for you to make substantial gain, let me be honest with you, with government bonds, you need from 1 million and above. That way, you are making good returns from the market. If it is below that, you wait for them to go for bonds, you buy shares. When they are selling bonds to come and buy shares, you are waiting for them to sell at a high price. So the gains they are made in bonds is what you are charging them to make your gains. But again, if you have enough funds, always reduce the exposure from one investment, not just shares. Always have several investments. So away you can play with the seasons to adjust your portfolio. You can rotate based on market cycles. During dividend season, hold on dividend paying stocks, don't sell to receive. Elections time, reduce risk shares, hold more cash. Waiting for prices to go down, buy. Tourism season, get into hotel and airline, but always check debts. When prices go up, sell immediately. These are not stocks to hold. Some of these are not stocks to hold because of competition. Harvest season, agricultural stocks. With that, I want to go to the last part. Then we come to Q&A. Portfolio modeling. This is the process of allocating your investment across different asset classes. When investing in capital markets, you come across the word asset classes. These are products that are sold in and regulated by capital markets. The goal here is to balance your risks and returns. Remember, the higher the returns, the higher the risks. The lower the returns, the lower the risks. Let's take a good example of an investor with 1 million. I will come now to a breakdown. I will show you that. You can decide 400,000, you go to shares. You buy good stocks. This you can spread across all the dividend stocks. Then you say 300,000 government bond to lock interest. Then 200,000 money market fund for short term. Then maybe 100K you can put in rates or a fixed account, which is earning you some returns. So that when you get money market fund returns together with this 200K, bring it to shares. When you get your government bonds coupon, bring it to shares. This 100,000 you have put somewhere else, if it is giving you return, buy shares. By the time you are frauding these three assets, government bond, money market fund, and where you have put 100,000, you have used the returns to build that 400K to the original 1 million. So when you're withdrawing your 600,000, you're coming to buy it as a profit. You're buying more shares. You can play these around even with small amount. These are just used an example because of government board. But if you remove most government boards, you can put even 20,000 in money market fund. So the core strategy here is have a stable long-term shares. Then you have a satellite holding for speculative purposes. When there is a new IPO, you are in. Any stock like what we have discussed, KQ and Serena, if you realize the prices are starting to go up and you are nearing holiday, by that time when it goes up, sell. So you are creating stability and also adding growth opportunities on your stocks. Don't just buy one share. Then we have risk profiling in NSE. We have different types of investors. We have conservative. These are people who just want safety. They go to treasury bills, bonds, and money market fund. We have moderate. Those are, even if you lose, yes, it will hurt you, but not. So you add shares on top. Then you have aggressive. Them, they are just thinking about future and growth. You find them in shares because of price movement and dividends, a bit of bonds, money market fund, but also daily on Forex and CFDs. I'll be training on Forex on and CFDs, but I just wanted first to bring you up to date with NSE and how you can make money, because that is information that is not out there to the public. Once you understand how you make money with the shares at NSE, it's the same with international market. I'm doing those trainings Wednesday and Fridays, both practicals, theory practical, and also giving tools which can help you invest. I will also now be adding boards and money market fund, then Forex and CFDs, so that at least you have the whole knowledge of capital markets. So in Kenya, people who are retiring, they go to boards because that is safe. When you get your pension boards, When you get those coupons, buy shares to pass over to your beneficiary, and also use dividends for your upkeep. But for them, they started a long time ago investing. Then for us young generation, it's always good to buy more shares. Build your portfolio early as you can. It will help you in future. So scenario modeling now based on what we have gone through. Bullish, you're adding growth stocks. Bearish, when market is falling, you're holding more of cash waiting for prices to go up. Then defensive stocks, which are paying you dividend. When market is just flat sideways, you are concentrating on dividend paying stocks. And it helps you now prepare for any shock in the market. And never panic when market goes down. It will always recollect. Always make changes to your portfolio once in a while, but not everything. Buy more stocks. Rebalance your portfolio. Rebalancing means trying to push that average cost down. If you're on loss position, make decision. Do I want to hold on this stock which does not give me dividend or anything forever? Let me sell it, buy a dividend stock. Then the dividend that I will be receiving, buy back until I recover my position. With that, I want to go to just one sample portfolio model, then you go to Q&A. And hopefully it was not a lengthy training today when you're not tired. Maybe on the chart as I open that, let me just see. What happened to my wealth guide? It is still there. I'm the one managing that. It's only that for the duration, I think for the last 2 weeks, I've not been feeling well. That's why there was not much of the activity. But it is there. It's my WhatsApp channel where I post everything. Yeah? But now that I'm back, you can realize I also have a bit of flu. But now I'm better. I should be able now to update daily. And not just that, there's a blog, and it's the one that I want to show you, where now I'll be posting everything. Yeah? So that we share this information out. I don't want to go with the information that I would have shared with you. So this is the blog. If we go to NSC shares then training, you know the advertisements. There is this portfolio model link. It's a Google Drive. It's a document you can download. Let me minimize these advertisements. On this page, you have all the videos. For those who have not joined this training before, let me share that link. That's for NSE and also for international stocks, all the videos and notes. The PowerPoint I'll actually share. I will upload on that link. Let me share. I will also, if you have not joined the WhatsApp channel, let me share that link. You join my wealth guide. It's my WhatsApp channel where I share those materials. Remember, I'm also doing everything that is outside AIB. That's why I'm not hosting these on AIB website. Because I also don't want to expose the AIB to regulatory checks, which they may not be party to. So this other link is for international stocks. So it has everything. And each has, if there is a tracker for each, like this spreadsheet download is for international markets and all the videos. So for international markets, you have 7 videos. For NSC, let's see how many. You have 10. Now I'll be adding this, will become 11. And there is no way I'm repeating myself. So again, there is no way I'm repeating myself. So you can understand how much you need to understand the NSE. And I've not cut any video. They are ranked the videos 2 to 3 hours. just to make sure I give you full information on each topic. So we go back to portfolio model. This is the link. Then there is also spreadsheet tracker. It has, first of all, for those who have not been in these trainings, it has stocks and when they announce dividends. We said dividend seasons. They are there. So you can position yourself before they make that announcement for interim and final, especially, because most of them they may not give maybe next year. But for interim and final, you may find most of these they will give. And all of them, they are dividend stocks, apart from the ones which are in red. The red ones don't touch. The ones in red don't touch. The others, feel free to buy because they will give dividend. Then we have other trackers for dividend, but I don't want to go through them. If you go through the videos, you'll understand how to create these. I just wanted to show you because of dividend season where you can get that. Now we come to our model. It is here. It's just a model to help you understand how you can build wealth and growth, and how you can split your investment. So you can decide banks and financial sector, you give that 5% of the amount you are allocating. If you say 100,000, that 5% of that, let me buy banks and financial companies. Then telecom, which unfortunately is just one Safaricom, you give 15. Energy and utility, Kenya Power, Total, all these are giving dividend. You give 15% each, maybe 1,000. You are building monthly. Remember, we are building monthly. Consumer and industry, these are EABR, BAT, in general, Crown Paint, Cabaseed, allocate around 20%. Insurance and reinsurance, 5%, because remember, insurance can be affected by anything. You don't want to put everything there. Then agriculture, you can give 10 for the shares that are giving dividend. Then if you scroll down, it has model based on your income. If you have an income of 5,000, nothing stops, even less than that, nothing stops you from getting into NSE. Allocate 2,000 to banks. Right now, you can buy one share. 750 to Safaricom. 750 Kenyan or KPOC or both. 1,000 BATN or EABR or both. Or you alternate monthly. This month I'm buying BAT, next month EABR. Then 500, you go to Captura, Kakuzi, Kabathid, all those. You will find by the time you are reaching how many years, I wish I have completed that calculator for calculating your wealth, but 5,000 times 12, that is 60,000. That is 1 year. You have invested 60,000 on these stocks. We have said 5 years, so you have 300,000 invested in all these dividend stocks. And within 5th year, you will start seeing your returns for your 5,000 saved monthly. In 10 years, how much will you have saved? 900,000, if I'm not wrong. Huh? Is that true? 300,000 by 5th year? No. It's 600,000. Huh? Not forgetting dividends and growth. Now do that to 20 years, assuming that's when you want to retire. With your just 5,000, you have built a portfolio that will take care of you in retirement. There's also for 10,000 per month, 20,000, 50,000. Now, when you start rising up and improving your investment, again, you are also adding more stocks in, even the most expensive. Then when you go above a certain amount, that is, if you are now starting from 1 million, that's when now you start even going to other government boards. So the strategy here is first build wealth with dividend. Focus on dividend paying stocks. Then capital growth due to more to the companies which appreciate in price and which are strong in terms of performance. Then always diversify. Anything above 100,000, diversify to other assets. Don't just limit yourself to NSE shares. Then recycle your dividend. Bring it back by the next coming dividend. This way, your dividend plus your growth at NSE will compound steadily, and in a span of years, that's what you expect. I hope I'm sharing the right thing. Just confirm you can see that. Just confirm. Yeah, good. So this is how you start seeing the effects. 5 years, you won't see anything, even in the brackets, even in millions. But from the 10th year, 20th year, you start seeing now the real results. Why? There are dividends which are coming in, you are returning back. So with your 5,000, you can build your portfolio of 3.5 million in 20th year. And also look into your retirement. Try as much as you can have a pension. If you're employed, if your employer have a pension, try as much as you can contribute higher. Remember, they are supposed to match. They will give you that free money more. If I can tell you, for the 14 years I've done my pension, I have some good money if I was to retire today. But because when I knew what pension is, I just told my employer, I actually increased my pension contribution. The employer was forced to match the same. And remember, you enjoy tax benefits. So always have, on the side, always have pension to cater for your retirement, because that money you get in your retirement. You don't want to retire and you're going back to your children to get money. Actually, that time, you should be the one giving your children money. So when this pension comes, you are helping them to invest shares and also set up businesses. And who would want actually their children to be employed? You'd want them to be employers. This is the time to create that employment. Start investing, not just in shares. When you have some money, put in money market fund. Returns come, put in shares. Use shares to build wealth and also grow financially. In your retirement, you will not go looking for people to give you money. Pass this wealth. You have seen with 5,000, 20 years, you can pass a 3.5 million portfolio to your children. With the economy, let's assume you have 3 children. Each one point, is it 1.1 million? Huh? They'll continue enjoying the dividends. This time, when you're investing these 5,000, you're also training them how to invest through their Jabo Junior. And again, you decide, let me also top up with the 5,000 in their own junior minor accounts. So you have that in AIB, minor accounts. You have 7.5. You have yours, you have your children. You can also decide, let me and my wife open a joint account. Again, we put 5,000. In 20 years, you're getting out with another. And remember, this wealth, you're not creating for any other beneficiary. It's for your own family. And family here is not just blood relatives. Maybe you don't have kids. You have somebody you can pass that wealth to as a beneficiary. Shares are never lost. As long as there is a certificate you can use to prove ownership of shares, or you have a statement from CDSC in digital form to prove ownership, those shares can never be lost. Shares are never taken to unclaimed assets. So I hope now today when you go out, you have full information on shares. Let's go back to our calculator, then I come to Q&A. I'll start with the dividend calculator. Let me share this link, because I know that there are those who may want to follow up. But it is locked for new, unless it's not locked. WhatsApp channel. Okay, let me check. It's not locked. You can join. I'll check that after this, but it doesn't have limit. I'll check. Let me first finish this. So you have this calculator I just created for you to make it easier for you to understand dividends. And you can play, if you're a foreigner, you can use it to know how much you receive in form of dividend. Let's start with the Kenyan. We select the stocks that have not closed books. Like here, it even tells you when the book will close. Then let me put 10,000 as the shares. Then I click calculate. It gives you a breakdown of what you expect in that share. Even the net amount that you're receiving, the tax that will be withheld by the registrar, it is paid out. And you know the actual amount you will receive. And the date, payment day, book closure, it even tells you when you need to have shares. Don't sell on this date. If you want to buy up to and including the total shares you have on 16th, qualify. If it is a stock that have, let me see if there is one which we can play around with. In general, it has already closed the book. You can see the calculator is even telling you. Book closed on this. You can no longer buy to qualify dividend. It's awaiting payment on this day. When you receive in general, if you scroll down to the investment, it gives you options you can invest that dividend. These stocks you can see here where I'm highlighting. So it is you to make decision which, if I get this dividend of 2,800, which share can I buy? Down there you have upcoming IPOs which are still active. These are active IPOs, not IPOs, dividend, sorry. With the name, dividend amount, the date the announcement was made, book closure, the date you need to have shares, and the payment day. Again, those which are waiting payment, if you already have shares in these, you already know when you'll be paid. You only need to check if you had the shares on the book closure date. If you go to foreign investor, again, it readjusts the tax. So that is on dividend. Then we have order simulator. This one I won't go today, but this can help you play around with the order entry screen before you go to the app to place the orders. I'll come to this next time. Let me pick questions. Let me stop sharing this. I go to questions quickly. Let me share. For those who may want my number, 0723 384 775. Let me go to the first slide so that you can pick my WhatsApp number. It is there, and my email. In case you are stuck with anything in the market, even if you're not with the IB, reach out. For me, I'm there to help. Reach out on WhatsApp. I will be happy to help you. So let's go 0723 384 775. I've put on the chart. The number is there. Let me check the channel because it's not supposed to. It's a channel you only need to follow. You know. Oh, it's okay. I see. Okay. Okay, I'll check why. I'll check why. Possibly somebody may have reported the channel, unfortunately. Okay. I've seen. But it was there active in the morning. I'll check. That's the downside of the market. When you start something, there are those who will try and bring it down. But I'll follow up. Don't worry. I'll handle that. Let's continue training. I'm happy to rebuild another one. I'm those people who don't lose hope and who don't get frustrated very easily. So don't worry about that. So let's go to Q&A. Don't know whether... Hey, I'm lost on where to check the NSE index. This one you check on price list, NSE price list. Then you scroll down. You scroll down to where there is a summary for NSE indexes. That's where it is, Martin. Something on Kenya Re price seems to be rising. Should one still buy or wait? For Kenya Re, I think, let me just check whether it's part. For Kenya Re, there could be maybe an announcement that is coming that may affect the prices. But again, Kenya Re usually used to be a penny stock. Now with one share, we are actually seeing those stocks rising up. You can check our research whether they have said anything on it, but there is no material information I've seen for the last few days. Possibly people are getting in to start rocking in dividends. Ari. The other one is on KCB. That one I think I said what is the issue. It's dividend dilution. Book Russia, then it will adjust with the dividend amount. You just hold, don't sell, unless you have made gains. If you have made gains, you can sell part of it. But I wouldn't advise to sell a counter that is giving dividend. Getting it back it might be a hassle, especially now we have opened market to everyone. How about when a company invested is at the administration of receivership? What happens to your investment either currently or in future? Your shares doesn't change. The number of shares you own in that company doesn't change. The only thing that is not happening with that company is it's not trading until that suspension is lifted. For Transcenture, it is the court case. Once that court case is determined, we'll see it come back. For Mumias, unfortunately, it's politics. So most of these companies, either politics or there is a court case. If you look at Mumias, people from Western refused to take sugarcane to Mumias. Ideally, that company would not operate at all, meaning they had to either close down. But remember, you are a shareholder. That company is listed at NSE. CMA cannot allow you to lose money. That's why they suspended. I think this year or last year, Rai wanted to buy Mumias, maybe with the intention of bringing back to a profitable company. It continues being listed at NSE, or he buys it, transforms it, buys you out as a shareholder, pays you. But again, people went to court for their own reasons, blocked that. So that's in the market. You find there are people who have their own personal interest, while others want to help, the others want to block. Monitoring umeme in your reference to Uganda market behavior based on politics and regional action. For umeme, again, it is there is a court case. There is the money they are following up. You know, they were not paid full amount by Uganda government, and the contract they had for distributing power was taken over by government. So for them, what they are doing, they are looking for other opportunities in other countries to distribute power. So umeme have not gone out of the market. Politics of Uganda are different from Kenya. For them, they play with the individuals, not the company. It's not like here where we play with the company. So we hope umeme will still continue being listed. If it will be delisted, they will tell you. But prices have gone down. No? Once that court case is determined, which may take some time, they might issue another dividend and also decide if they don't have anything they are doing, they liquidate their assets and pay you. Kenya Re dropped by a huge margin. What shall we do? For Kenya Re, again, there is no information out. Maybe I check whether there is anything. But I don't think there is anything that is affecting that company, which you can say it's significant. Possibly it's just the demand and supply. But you don't need to be worried a lot. What you can do is just to hold and see the next week, because weekend you can't do anything. See how it opens on Monday. If price recorrects and you're in profit, even if it is a small profit, to avoid that worry, just dispose it. Even if it continues going up. Any share you feel you're not comfortable with, it's always advisable to remove it because it will make you sell the other shares. Stanchart is a good company in terms of dividend and also growth. Its price is also high. It's one of the stocks I can advise you to hold as a defensive stock. And wait when there is instability, when prices go down. That's the time you hit in Stanchart. You buy it at a lower price. But again, the shares that have high prices, they fluctuate a lot in price because of spread. The spread is the difference between top bid and top ask. You find for them, they usually have that wide spread. That's why you find price goes down with a huge margin, price appreciates with a very huge margin. But you don't need to worry as long as the share is giving you dividend. Portland cement share market shows a bullish market. What would you advise? Just hold. If prices are still going up, just hold. Don't sell, but also watch next week what happens. If prices still continue going up, you are in green, you can make decision to sell, take another share. That is for short-term traders. Long-term, I wouldn't advise to sell. Day trading for some stocks. Day trading is where you buy and sell the same day. It is there. Intraday, where you buy and sell the same day, or sell and buy same day. Then at the end of the day, we calculate commissions. There are two sides, the buy side and the sell side. The side with the higher commission is first leg. Side with the lower commission, second leg. So on the second with the lower commission, we don't charge you, and also NSE levies. So that's one way you make money with the intraday, then with price movement. But this you can only do with volatile stocks which are liquid. You buy low, you sell high, and you need money to buy. Or you sell high when you have shares, buy back when it is low. But factor out commissions. I think I've explained. You need both sides to get that offset of commission and NSE levies. Umeme, I think these I've talked about it, but this is only a speculative stock for now. If it is low and you realize prices are moving up, you can buy low, sell high, but not for long term. Is Home Africa a good share? For this one, I wouldn't advise a lot, but maybe for speculative purposes, not for long term. About the delisting of companies by NSE, what happens to investors? Before they delist, you are told what to do. Either the company pays you the money back based on the current market value, or that company is being bought by another company. So you are bought out as a shareholder. Every information is made public before that happens. Example of non-dividend paying stocks. There is a variety. Its pros and cons. Pro is that you can buy low, sell high, but then its con is that it's not that liquid. You may not find people selling. Join rate, when is the right time to buy stocks? There is no right time to buy stocks. You can buy anytime. It all depends on your strategy. If you're buying for dividend, you can buy anytime. If you're buying for growth, that's when you time the market when it is low. So you buy low, you sell high. The moment one buys when stocks are on momentum, won't that increase then average price? Remember, there is a time that the stock will come down and you continue buying. This is for the people who are buying for wealth. You don't stop buying because the market has gone up. If you're buying for growth, that's when you're worried about prices because you need to sell. Even if prices are going up, you never know what will happen tomorrow. Maybe even prices will triple. Difference between mutual funds, index fund, and ETFs. Mutual funds and index funds, those ones, they are managed by fund managers. You don't have, they are not traded in exchange. For ETFs are funds that trade in exchange in any stock market. Index funds, they are based on an index. Yeah. But join maybe next. These I can cover the international markets because that's where you can find them because of ETFs. Come Friday, I will be able now to give you the full details. It's my first time to join the lesson. I heard you say that this is the 10th. Is there a link? I've shared that link. The first time investor looking for penny stocks are TCL and cable, a good investment. If for a first time investor, go for dividends until you understand the market. Cable, I think these two are suspended. If I'm not wrong, TransCentury and cable, they are suspended. You can't buy them. List of the NSC shares that give dividend. Yeah, there is that link I've given. Just go to that spreadsheet for the NSC training. It has all the stocks. All the stocks that give dividend and when they give the months. I'm also trying to work backwards and list all the stocks that have given dividend and dividend yield each year. Once I'm done with that, I'll be happy to share. Once I recover my WhatsApp channel, I'll be able to share. What happens to shares and shareholder when a company is suspended? Nothing happens. It's only that you can't buy or sell shares. Your shares are still there until whatever made them suspended is sorted. Stanchart lost a case yesterday. Will this have impact on share price? It will depend on market sentiment on Monday. I've already seen people getting excited. That may push prices up. There are those who are panicking. That might push prices down. So it will depend. Just watch out. If it is a positive sentiment within the market, price will go up. If it is a negative, it will go down. But I don't think it has much of effect on its financials because most of the companies, what they do, if there is a court case, they always have some reserves to handle that, the outcome of the court. BKG, yes, it's a good, but for long term. Housing finance, maybe for speculation, because we have seen some politics going there, but it doesn't give dividend. Would you kindly prepare a talk on stock valuation? How would I know that I have bought a stock at a good price so that I can hold it for long? Yeah, as you notice from those trainings, I'm going step by step from introduction, basics, trading, building wealth, how people made the wealth to millionaires, to today now how market is affected. Now next time now we are coming to portfolio building. Kenyari, I think they give dividend. It's a good stock. It's a good stock. What happens when one tries to sell, then it says stock not available? Either you don't have those shares, you just go to portfolio valuation, you check whether you have those shares. If you have those shares, you just bought within the last 3 working days. Remember, you can only sell on the 4th working day by regulation, T+3. So you just go to portfolio valuation, check when you bought. Or you are trying to sell more than what you have. So if a company does not bounce back, it will be a loss to the investor because he cannot sell shares to recover even half of the original. How can one go about? No. If a company is not coming back, remember it's suspended by CMA. They need to tell CMA what to do with the investor. Either they liquidate their assets, they pay you. But remember, when liquidating assets, they first pay creditors. They sort out creditors before they can reach out to investors. So you may find maybe at that point, the amount that is left is what is shared with the shareholders, but CMA is always on the case. There is a fund, they usually have investor protection fund. They might decide to use that to compensate investors. You will never lose money in NSE in entirety. Yeah? The reason why they suspend, they know whatever is affecting that company is temporary or it is politics. And remember, CMA don't play politics. Where brokers and CDSE can play politics, CMA, they don't play politics. That's why they suspend. Actually, CMA and CDSE, they don't play politics. Because CDSE, they have your shares. CMA, they have the authority. Brokers, they don't play politics because they have your money. So CMA will never let you lose your money at all. So for Mumias, hopefully, and it is my prayer, you know, we people from Murima, we have enjoyed presidency. People from Rift Valley have enjoyed. I would pray we get a president from Mumias side, Western. You see that company waking up, and you as the investor, when it makes money, get out. We have had a deputy president, I think, I'm not sure whether he was from Western during Kibaki's time. That time Mumias was doing well, before politics came and took over. So most of those is just politics. TCL, it's a court case, I think, with Equity Bank. And with time, I think that will be sorted. They come back to the market. But what will happen, immediately they come back, you make money, just move. Sell those shares, move to another share. For WhatsApp, I'll check. Thank you for those who are wishing me quick recovery. I try my best to offer training to my best of knowledge from 2007. That's when I joined this market, just to make sure you know what you're doing in the market where you're investing so that you don't lose money. You just make money and build wealth. In modeling, does it mean you have to consider all sectors? Not a must. If you have, it depends on your income. If you're able to put 1 million, buy all dividend stocks. You are building a portfolio which will give you money later. If your income is low, now try to diversify. Today you buy, this month you decide I'm buying only equity and KCB. Next month another sector. Next month like that. You build your portfolio slowly. You don't need to buy all of them at the same time, and you don't need to buy all sectors. Remember, there are people who religion does not allow some sectors. There are people who believe don't allow, so they can't buy all sectors. So it is you as an individual investor, you decide, I will buy shares in these companies. Remember, if I tell somebody else to buy a beer, you tell me, but I don't drink. So if I tell somebody else BAT, they don't smoke. Then they don't want to be associated with smoke. Maybe they know the effect of those products. So that's why it is you as an investor, you try and diversify your portfolio based on your target. In the previous videos, let me share YouTube channel, because now I don't have access. Before I recover my, let me pick that that link for the playlist. That has all the videos. That link has all the videos. So for the sector, it is you as the client to decide where you want to put your money. But don't put in one sector alone, diversify. Are there available agents to support beginners? Yes, you can call our office. If nobody picks your call, my WhatsApp number is there, just reach out. Working days, Monday to Friday, 8 to 5. But for my WhatsApp, it's available 24/7. Just send me a message. I'll get back to you. During working hours, you can just call directly if you feel you need any information. So if I have 100 ABSA shares, will they send me 20 shillings? So it is the dividend. If it is 0.2 times 100, which is 200. 0.2 times 100. Yeah, it is 20 shillings. That's why we advise buy more shares. So you don't worry about the 20. Just buy more shares. Like you can decide every day I'll be buying 100 shares of ABSA. By the end of the month, you have 3,000. That's a good dividend. Reinvest back. As we said, you only start seeing real gains from NSE from the 5th to 10th year. That time, day trading, I've talked about it. How do I update my CDSC account email so that I can get statements? Just go to our website, aibaccessafrica.com. Under downloads, there is a form for individual account opening. Fill that form, but also reach on WhatsApp. I can send you the details. You just fill in that form, send to our email address. It's there on the website. But again, you can also send to me, connect you with the customer care for the update. For the WhatsApp channel, let me try and recover. If I'm not able to recover, I will recreate a new one. Then I hope everybody have come from our social media accounts. I will share there. Is SKR a good stock buying owing to the fact that it is new? I would look at it from the price aspect. It's a new stock, but the prices are a bit high. Maybe the ETF. For SKR, I'm not sure whether they will start giving dividend. You know, we didn't have a product for Hindu community. I think that's why Indian community. That's why they listed at least because they are Indian community within our market. Maybe that was the target, but you can also ride on the wave based on market performance. For the last day, it has been in the market. Thank you so much for those who are appreciating. Kenya Re, they suspended them managing director on Thursday. Oh, okay. I think that was the issue. But that does not have any effect because there is already an acting. And it's the same thing I said, market sentiment have effect on the market. People panic, managing director have gone, this company will close, even if it is not closing, those rumors will close down, we lose, we come and start selling, price goes down. Never panic. Some of these, they are done in the interest of the shareholders, as you. Maybe because he's being investigated, there could be an issue. He's being investigated on. That could be the reason the market went down. But that will not worry you. There is already an acting. There is already an acting managing director. So hopefully you see some changes on Monday. That's why on Monday morning, you need to check. If you start seeing it blink green, buy in the morning before it goes up. Thanks for those who responded. Kenya Power, I don't think there is anything new, but it is a good company. You know, they enjoy the monopoly. And I think politics, don't think there is a politics these days on Kenya Power. They have started giving dividends. Hopefully they continue. If they give another dividend, then it's a strong counter. Equal sign means the stock or your portfolio have not moved. The price have not moved based on previous closing price. The equal sign, it means price is stagnant for that day. Yesterday I saw Kaba seed starting to decline. What do you propose? Do I hold for the coming week or sell current position since it is I have made my gains, though I can never hurt to get more out of it? Maybe you check Monday morning how it opens. If you see price continuing to dip, you can make decisions to take your gains. But again, it could be something temporary that is affecting its share price. If it is giving you dividend, I would advise, and it is a good dividend, I would advise not to sell. Which specific share can I buy now as a beginner? As a beginner, start with the shares that you know. And also, it varies with the amount that you want to put. One of them is Safaricom. Also check upcoming dividends. There is that Excel I've given. Look at the shares that are giving dividend around between now and December. Buy them. Get the dividend. Feel the joy of receiving dividend so that now you can start targeting the next year's dividend. Target the dividends that will be paid between now and December. Buy those shares. Get that dividend in form of cash so that you know you can make money in NSE. Now, when you understand the market, now spread your wings to other shares. Kenyari, I think that is day trading. I've comment on day trading. That one I would think I've clarified. And you can do for all shares, day trading. Notes, yes, I will share today. It's only that channel is suspended, but I also have a Telegram channel. I will post everything on that blog. Just note the blog link. I'll post even the new link if I'm not able to get my WhatsApp channel. WhatsApp group. I will be competing with the IB. Actually, you have given me an idea. Let me open a WhatsApp group. I think I never thought about it. It's only that I didn't want to compete with the IB because you also have a WhatsApp group. I will open a WhatsApp group. I think that's better. Because also, I will also be allowing you. Actually, it is a community where we can also discuss. You know, most of us are on WhatsApp. I want somewhere we have that touch. If I ask questions, somebody else can answer even if Peter is not there. Related to market products. Shri Krishna, this one I think I talked about SKL. I think it is targeting Indian community in Kenya so that they also come in the market. It's a good stock, but just check how it is trading. Again, you don't buy like Absa Gold, you are stuck with a share that is not moving. I will open a WhatsApp group. I had not thought about it, but I will also check why the channel was suspended. Maybe somebody may have reported. I joined this training forum dates. The recording I will share. Just note my WhatsApp number. I will share. What about HFCK? HFCK, they don't issue dividends, maybe, but there are rumors that they are targeting these projects that are being done by Kenya Kwanza, affordable housing. If they're able to get that, then it could be a good counter. And you can read it. I think our Honorable Kimani Ichung'wah, he was exposed, so you can tell the intention, what his vision was, getting majority shares in HFCK. Even, is it Anthony Mwaura? Yeah. So you read market politics that way. Why are people interested in this stock? Look at KPLC. Did Inyoro one day just woke up and it was in news, he's buying shares. That told you something would happen with KPLC. How long did it take when he left that committee chair? price shot up. So for housing finance, maybe they could be eyeing those. But again, politics, I would try to avoid that stock and go to a stock that is stable. Is the Dubai investor already on Eveready board? Is the gas and oil conversation a reality or cheat by Dubai investor? Again, the problem with Kenya is politics. People like playing politics just to spice some action. But this may mean it may affect a few stocks. It could be a reality, it could be politics. We are headed to elections. When will the digital platform for global be available? I'm working on it. I'm part of it. I'm the lead. I'm head of product development and innovations. So don't worry. Once it is ready, we'll release to you. Why can't you post your reports? Why can't you posted your report identity value and growth companies and the trade that support this? I'll talk to the research team because they really rely on your information. Some of this information they assume it's not needed, but I'll talk to them. I understand what you are talking about. How long does it take to get a CDSE account? You open the digital account, is supposed to take the same day, but we have had some backlog. We usually get 200 account opening requests a day. You can tell then how long it takes. Just drop me a WhatsApp message with the ID number. I'll follow up Monday. You get the same day, Monday. Where does your company post companies with dividend? And when they share on our website, let me share that link. There are groups you can follow, WhatsApp group and Telegram group, and also register on our website, our portal for research. It is there. Just scroll down, join any of the groups. That's where we share research related. For training, I share it separately because I want to train things that are not just on AIB. So no investment. On WhatsApp's page, I will actually share those information on our social media once it's back. Poor management and fisher transaction before the river mining TSL is suspended. How do we shareholders get protected? CMA, they suspend that share from trading until actions are taken. If it is a company which is poorly performing, they are suspended. If it is management, the board is requested to suspend. So CMA have full authority. So in stock market, you have fully any product regulated by CMA. Never even feel worried investing. I don't want to incite you, but if you have an issue with a broker and they feel you're going to CMA, trust me, they can pay you not to go to CMA. We know the effects. So CMA protects you. Even NSE, they are the CMA. Even CDSE. I hold KPLC shares since 2011. When they announced full year results, it rallied a little bit. Can I sell and keep my pace? If you have made gains, yes, then maybe go to another counter. If it is a Taros, then don't sell. But again, look at long term. They have started giving dividends. But if you bought at 1 shilling, that's around 10 times profit. You can sell, maybe buy another share. Reactivating a dormant account, just send me a WhatsApp message with your email address, or you go to our website at the downloads, download that account opening form for individual, fill in and submit to us. You can let me know when you're ready to submit. I can give you direct emails to our customer service. You said that form for it to be activated. It is your AIB account which is dormant, not CDSE, just to protect your account. Remember, us, we are dealing with your money. We don't want anybody getting into your account and you are withdrawing. Talk about ex-dividend and come dividend shares. Ex-dividend is the shares that are trading one day after book closure. Like KCB. On that, they are trading ex-dividend. So you see in NSE price list, it is noted EXD somewhere. It means it is trading ex-dividend. That is put there to caution the investor, so that when you see the prices go down, you know that share is trading ex-dividend. Actually, that's what you should be checking. Price list NSE, quickly go and check. Why is this share dropping? Is it EX somewhere on top? That means that share is trading ex-dividend. Come dividend means the share is still carrying the rights to declare dividend. So you receive dividend in the coming if they declare upcoming dividend. But those ones you don't need to worry about. The only thing you need to worry is ex-dividend, because you need to check you don't sell at a loss. Come dividend is before ex-dividend date. That is before they close their books. It is trading within the dividend period. I forgot my account password. I have been trying to reset na sijafanikia. Nitumia sahi before I leave the office, I will reset you. Today I came to the office just for you, our client. So just send me a WhatsApp message. I will say reset you, but don't reset yourself on your side because it will send multiple requests. Just send me either your username or your ID number. I will reset you before I leave the office. Changing dividend payment to M-Pesa from bank. Send me a request on WhatsApp. I can send you the email address with the, I can send you the form on Monday. Just send me your email address with a request, dividend payment. Monday I will send you the form to update your dividend, CDSE form. You fill in, send to us, then you give it a week, because CDSE must call you or send you an email to confirm for changes. So make sure the number or the mobile you'll be given is reachable, because they said that confirmation. And it is for all changes in CDSE. They always reach out to the investor. Kenya Power started to decline. Is there any effect? Should they be sold? Kenya Power, there could be a temporary issue. But again, also sentiments in the market. I have not seen anything major that warrants any panic. But remember, the way stock market works, prices always reach at their top, then start declining. Then again, market recorrects. Username Jacqueline, just send me a WhatsApp message. I hope this is NSE. Is NSE stock good to invest? Do I talk about them? You know, they're the ones who own the market, but the prices are a bit low. And then dividend, I'm not sure whether they have given. Maybe we wait for the announcement. That time you can make decision, but it is a good stock. Why? NSE is the one that is providing trading. It can never go down. So you can buy. Hopefully they'll be giving dividend. So in rare cases where stockbrokers cease operation, how can an investor access their stock? If AIB closes their books and they close their office, in CDSE, AIB doesn't stop existing. Remember, you as the client, you are tagged some shares to AIB. You have two options. Go to CDSE and request for transfer. They will send you to AIB. You fill in transfer form, you move to another broker. Nothing changes. Your shares just move. They continue with the valuation. at the current market current prices. The other scenario is where CMA will tell you what to do. They will actually go tell you before AIB closes their door, go and make transfers to other brokers. So never be worried. Only be worried if CDSE is going down and also NSE, because CDSE are the ones who have your shares. NSE have the market. So if they go down, then you can't trade. For brokers, never leave any cash in your account, because that's what they have for you. If you buy shares, you can always move. So with one share rule, you can clear your credit from the broker. Only if you have money, that's the only time you need to be worried, because they need to pay you. If it is in share form, it's a very easy thing. CDSE will remove, actually they will have the word AIB in your account, replace with another broker. Variation continues as it was. Nothing changes. It is the same CDS account you use with other brokers, because one CDSE can only hold one ID can hold one CDSE account across multiple brokers. So that's how the market works. How long does it take to get a CDSE account? I think these I answered. We have a backlog on our side opening accounts. As I said, we are getting 200 accounts a day to open. If you have not received Wairimo, my WhatsApp number, I hope it is the one that is displayed on the screen. Send me your ID number. Monday morning, you will get your CDSE number and start trading. If you have ever sent email and it has not been responded, forward to my email address. I follow up for you. Dividend, I think I've shared that link on our website at the research. Let me share again. Join any of those groups or you register on our portal. There is a portal there for research. Wairimu I've shared again. Then is there payment for transfers from one broker to another? It depends on the individual brokers. There are those who charge outgoing, transferring out. Yeah, but there's a charge at CDSE. I'm not quite sure the amount. I may need to check that on Monday. But most of the brokers don't charge. It's only CDSE. Equity denied me the last dividend that they cannot send money by M-Pesa. Actually, this is an issue we have with the Equity registrar. They compete, Equity competes with the Safaricom through Equity and M-Pesa. That should not be affecting you as the investor. And I think this is something that then needs to reach to CMA, because this is market malpractice. It is you as the investor who have said, I want to be paid by M-Pesa. If they don't agree with M-Pesa platform, they need to find a way of paying you. So if you have filled the form, you don't need to share with the registrar, you share with the broker. What you can do, just walk to Equity Bank, because they are their own registrar, head office. Go and talk to the person who is registrar side. Write a letter, sign, attach your ID. Tell them you want to be paid via either bank. But in this case, most likely they may have sent a check. But this is an issue we have with Equity Registrar. Sometimes they decide that we are not paying via M-Pesa. But again, Cornelius, reach out to me on Monday or today, just send me a message with these. Let me check with the team that had those registrars. We see how the other clients were sorted out. KQ shares, KQ is making losses. Maybe we are targeting to sell in December, but not a long term for KQ until they get out of loss position. So what you do, you check their financials when they release. Check their liability against the assets and also debts. Because if they need to pay any debts, it's the assets they use to pay. with. If they have debts, they will also use your share capital to pay those debts. Always check if a company is always on debt and they are not making any tangible revenue, then don't put your money there. It's like putting your finger on boiling water. While it still be listed at NSE, remember there are people who own shares. That's why it cannot be delisted. Kenyan, too, for joint account can't pay via M-Pesa. For joint, Beth, just reach out on WhatsApp. I think we have been communicating on WhatsApp. I'll try as much as I can to help you. I think the other issue, you may need to look for that certificate that is missing. Actually, that's where the registrar are stuck. And this is what happens when, that's why we advise for joint accounts, if you want to do it, do with your kids or your across trusted relative. There is a possibility if you open with a friend, they'll go and say, don't tell you. If they remove them from registrar will have a very hard time. Because shares, you're only either supposed to have a certificate or they're in digital form. If the registrar is not able to track any of those, there could have been sales in between. So for joint accounts, we always advise, if possible, do with a trusted friend. But for Kenyan, just reach out on WhatsApp. I will help you on Monday. The junior account, must one do it manually? Yeah, for junior account, just go to our website, then downloads. There's a form for junior. Because there is no way we can be able to validate your child's birth certificate. For ID, we are doing it real time. That's why we are able to do digital. For junior, download that form, fill, send to my email. And also you can reach out to my WhatsApp. I can give you additional emails. For me, it's just for easy follow-up so that you get your account opened on time. There is no that delay. For me, I would want your child to start investing. I've hosted questions. I'm waiting for more questions. Today is a Saturday, let me see. We still, I had planned to go up to 3. If you have any question, you can ask. If you want to drop, you are free to drop. Note my number. Reach out anytime. I'll create a WhatsApp group. I think that's much easier. But being a technical person, I would also want to understand why it was suspended, so that we are not playing politics. You know, in this market, anything happens. You create something, somebody feels information is being given free, they report, it's suspended. How do I update my CDS account email so I can get? There is a form. Let me share that. Let me actually go to that form, because I can see I'll cover both junior and updating account. There's a form you need. Let me see if I have that form. It's not there on our website. Let me share the contacts here. Just send me an email. I'll send you that form on that email. pc@eibaccessafrica.com. I'll send you on Monday with instructions. I will also copy the people who process, so that when you're responding, you send to them. So Charles, just pick that email, or you can send me a WhatsApp. I'll reach out. For junior accounts, can one also trade on stocks? Actually, you're opening junior account to buy shares. Yes, you can buy shares for your kids. So when you open a junior account, the child owns the account, but it is you as a parent who manages the account. So you are buying shares on behalf of their children. That child becomes a shareholder. If you're buying Safaricom shares, he's part of shareholder and he's entitled for dividend. If he has a birth certificate, unfortunately, he can't go for AGMs, but you as the parent, you can go on their behalf. Huh? They will buy shares just the normal way you buy for yourself. When account is opened, you just go to sign up, you link it up, you can access through our digital platform. You don't need to set the orders via manual process. Huh? You can link it to your digital platform. Just reach out. I'll take you through the process. Huh? Thank you for those who have for those who are leaving. Thank you so much for coming. Eh? Let me pick the other questions, then we can wind up. Can one trade with more than one broker? Yes, you can actually trade with all brokers. It is the same CDSC account, only that you only see the shares in each broker when you visit them. Eh? If you need to see all the shares, you need to go to CDSC. They'll give you the list of shares in each broker. Thank you so much, Beth, and the rest, thank you so much. Just for curiosity, any advantage of having two CDS accounts? Let's say one for dividend, another for capital gains. It doesn't work like that. We don't have capital. Oh, they're called growth stocks. Dividend stocks are also growth stocks. Huh? So there is no advantage of having two CDS accounts. You can only open that if you have a passport and ID number. But there is no advantage. Huh? It is the same shares, prices are the same. Huh? What you are doing, you're only increasing your work managing those two accounts. Huh? What you can do, just open one account with ID, because ID will never expire. Use that. When you make gain, when you buy shares, the price goes up, you can sell, get gains. If it is a company which have declared dividend, don't sell. Wait for dividend to come. I hope now it is clear. This is very educative. Looking forward to use shares to grow wealth. That's my goal. I would want to see you grow your wealth. Help on how one can get to calculate if share is lowly priced for entry. There are ratios you use, and there are many. I had planned on Wednesday. Unfortunately, most of you have dropped. On Wednesday, I plan to show you how to read company financials, both P&L and balance sheet. How you can extract those ratios, PE ratios, price to book, because those are the ones that we use on our side to tell you whether it is overvalued, undervalued, and whether it is a buy or sell. So I'll do that on Wednesday. I had planned to do last Wednesday. It's only that I wasn't feeling well. But now this Wednesday, I'm happy to help you. Now you start doing research on your own. For international markets, I've already done a full Excel spreadsheet because I can be able to pull international stocks prices using Google Finance formula. For NSE, prices are not available. That is the downside of NSE. If prices were available, I would have automated that for you. But I'm happy to do that now on Wednesday. What is the lowest amount for a beginner to start who is green? It depends on the share you're buying. If it is a varied, it is at 1 bob times 1 share. That is around 2 bob, around 4 bob. I'm just giving you a tentative figure. If it is share trading at 240 shillings times 1, that is 240 factor cost, around 250. It depends on the share. You multiply by the number of shares you want, then you factor a small amount for charges. For us, we have lowered the entry point from 3,000 to 1,000 for the first time to activate the account. But you don't have, if you don't have that 1,000, just reach out on WhatsApp. I can manually enable it so that you start with what you have. Is there the right time to buy Safaricom shares? There is no the right, it all depends on what you're looking for. If it is capital gains, always target when prices are low, mostly after book closure or when there is a material, when they want to make any announcement. If there is a corporate brief by Safaricom, remember that day prices are open. If you're looking for growth, for wealth, then any time is the right time. It all depends on what you want. Are you looking to make money? Then you look when prices are low. Are you looking to grow wealth? Buy anytime. For upward share price trades, how do you detect the ceiling for the maximum gain? You check on the graphs. I hope NSE they have that. I'll check, and maybe next week I come with it. I'm also trying to check TradeView whether NSE have protected access to that. If they have not, I would add that chart on my blog. If the information is not there, I'm trying to create that database for the historical prices and also historical dividends. Then I can create charts. I'm also a developer and a web developer, so it's something I can do. It's something I'm planning to do. Actually, it's only that you can't access those links on the blogs. I've started building slowly. I want to make sure that information is available to you. Annual charge for owning account, 200 shillings. You don't need to worry about that. You only pay once. And if you open account today, you're only paying for the remaining part of the month. Is it true you can access your shares from different broker on NSE Dosika app? I'm a pioneer of that app. I'm the one who helped develop. The history of Dosika app started with AIB integrating with My Stocks. If you know My Stocks app, My Stocks sold the app to NSE. They rebranded to Dosika. So you have two apps which look the same, Dosika and My Stocks. Just download and look how they look. They are the same. They're the one in the same app. Hopes for people aged 40 years. And I said, maybe that's why I dropped. I'm 42 years. I have a horizon of 70 years to be investing. Buying without doing anything. Then from 70 years, it's the shares paying me dividend as I transfer my wealth to my children. Those are 30 years you can invest and make good money. You saw in that PDF, you can make within 10 to 20 years with a 5,000, you can be able to make a portfolio of $500,000 or more, depending on your frequency. So that can tell you, yes, even from 50 years, 60 years, you can. Changing broker, you only need to go to open an account with us from our digital platform. Once you open, you go to the other broker because it is the same CDSC number. You ask them for transfer form. You fill in, make sure they capture on the system, they stamp, bring it to us, we complete. And you don't have to do it physically. You can request for the transfer form from the other broker, fill, scan a clear copy, send to them. They capture, they send you a clear copy, you send it to us, we finalize. Because for us, once we complete, we send that clear copy to CDSC to complete. Thank you for those who are reaching out. I'm feeling better now. In terms of international charts, I believe it is graphs, unless it is something else, Christine. Use tradeview.com. Tradeview.com. I've left that link. They also have an app. They have good charts, candlesticks, and everything. If it is something else, maybe you can let me know. Ordinary shares and rights. Ordinary shares are the ones which are trading at NSE. A listed company at NSE, if it wants to raise more capital, it can't list again. It can only do through rights issue. What they do, existing shareholders are given a chance to add more money to that company, but get shares at a discount. So you have a choice. You can take up the rights, you pay that discount, or you decide to sell them to another person who will take the share, now those rights at a discount. Remember, this time we are talking about rights. Or you can decide I will not take them, let them go, let them get lost. Then, when rights close and they are eroded now is ordinary shares. They are topped up to your shareholding. The reason why you could be seeing rights, maybe it is an old statement. If you check the current one, may not have those rights. They added to your shares, or it's a rights that have not closed yet. So you just give it some time. Huh? Now, for joining the new WhatsApp group, I will circulate on our social media, the platform you found this presentation. So you'll be able to join from there. A personal question, am I the one training Feb Kaut for software engineering? Not me, but I also do separate trainings on programming. Programming using major languages, both front-end and back-end. For those who may not know, back-end is where you're dealing with database and how to connect to database. Front-end is now like what you're seeing the web pages. So that's actually my core training. Hearing, I think now you can hear. Anyone knows time for Wednesday webinar? It's me who still set up. It will be 12 p.m. I will announce on our social media. And if I will have recovered that group channel, I will also share. But due to what I've seen today, I'll also create a WhatsApp group. So I'll be the one. I'm the one training Wednesday and Fridays. It's only that we have not done for the last 2 weeks. So I saw it necessary to do it today to recover that time. At 40s, your device buying and buying, you recommend for dividend, share aiming for wealth creation. Yes, because you see at 40, you're not looking to make money. You are looking at your 60s, retirement. You don't have a job. What will you be doing? It is these shares you need to start now buying without selling dividend stocks at your 60. Those are 20 years of investment. Dividends now you start flowing in like salary. That time you can decide some of dividend, let me continue buying shares. And the other one is to take care of your health and also your retirement and also support your children. Remember that time maybe they have also come into market. Now you're trying also to support them to build their portfolio as you plan now how to pass it over to them. If you buy a share a Tuesday, how does T plus 3 work? So T plus 3, T is the Tuesday. So Wednesday, Thursday, Friday. So Friday is the 3-day. So if you want to be paid, we will receive money on that Friday. We can only pay you on Monday morning. If you bought, you want to sell the same thing. Tuesday is that date is the T. Wednesday 1, Thursday 2, Friday 3. So you can only sell on Monday. So T plus 3 is trade date plus 3 working days, as long as there is no holiday. So 3 working days. And with that, I think we can call it a day. Thank you so much for coming. And then thanks so much for those questions. They challenged me. I didn't prepare for them. But for me, I always advise, never cram NSE. Always understand it. That way, you'll be able to buy shares. So can I start at age 25? By the time I'm 40, I will be hot? Yes. Actually, as I said, minors can open account, junior. Somebody who have a birth certificate. There are those who get birth certificate within first few months of birth. So you start building your wealth that time. Most of the millionaires you see at NSE, they started in their youth. They didn't start at 50s, 60s. They started 20s, 30s, 40s, 50s. By the time you're retiring, you're actually becoming to AIB or NSE to just watch how your portfolio is doing without doing anything else. In terms of gifting shares, is transfer done at broker level? Yes, it's done at broker level. There is a There are forms or letters you need to sign instructing you're gifting the other person and the relationship with that person. Then we just transfer the portion that you want to gift them. Thanks so much, and I hope you have learned something today. Yeah, it's my hope by the time we are reaching, because I can see us going to 30th episode. By that time, you have understood investment in and out. So thank you so much, and reach out. My number is always available. I don't know whether it is still sharing. That number is available on WhatsApp. Send me, I'll get back to you. It's my personal number, but because I realize most of you clients, you are going through a hassle reaching out to the brokers, which is not my intention to see you suffer. So reach out. I'll help you. Thank you, and let's meet Wednesday.